morning, good afternoon, and good evening to the rest of you. Welcome to another episode of Bitcoin Magazine Live. I'm your host, Q, coming to you yet again from my mother's basement, and I'm joined by my co-host, P. How goes it, P?
As always, it goes fantastically. A lot of news to talk about today. I am super excited to dive in. Let's get into it, man.
We got a jam-packed episode for you guys. We got a long news and notes segment because I've had so much FOMO not being a part of the news and notes episode on Tuesday, so I demanded a whole hour today. And then we're going to have an episode of Fedwatch because I also demanded that Fedwatch not happen when I'm not here. So, booyah, you'll get Fedwatch today. And of course, Jimmy Song will be joining us for another song sheet, and we'll be rapping with him in the final hour. But let's kick things off with some news and notes. So the first story we want to talk about, not Bitcoin related whatsoever, but I think it's still valid and worthy of discussion. Boris Johnson will be resigning as the head of the Conservative Party in the UK. This, to give context for you Americans who don't care about any other country other than your own, this is the equivalent. What has essentially happened is the equivalent of every single Democrat in Congress coming out and saying, hey, Biden, you kind of suck at your job and you should resign. And Joe Biden saying, all right, I resign as the leader of the Democratic Party. Now just flip that over to the UK. And that is essentially what has happened with Boris Johnson and the Conservative Party. Party members spoke up to a point where it was almost a snowball effect. Slowly but surely, everyone was voicing concern over his leadership and what he just has done and said over the tenure of his prime ministership. I don't know. We don't have prime ministers here in America. So that's the nuts and bolts of it. P, I'd love your thoughts on what it means to have the leader of a G7 country step down.
Yeah, I agree, man. This is a big deal. It's particularly interesting because there has been this tidal wave of resignations from his party, and specifically citing his leadership. CNBC reports we're almost at 60 resignations, which is, that's fucking huge. There's been this 48-hour period of this incredible pressure from his own party for him to step down. One of the most significant ones was Finance Minister Nadeem Zahawi, who basically Boris Johnson put in power, and then immediately Zahawi was basically like, yo, this is total crap, like you got to get out of here, which is a really, really bad signal to send. So Boris Johnson put Zahawi in power, and then within 2 days he was like, yeah, you need to step down, this is crazy. But yeah, I agree, man. This is very significant. He's been extremely unpopular lately. He orchestrated Brexit. People are just very, very unhappy with him.
Well, so that's actually an interesting point, the Brexit of it all, because the parliament in the UK actually had an opportunity about a month ago to just vote him out and kick him out as prime minister, but they opted not to do that. And I'm paraphrasing from an Atlantic article that I'm citing, but it seems as though there is a belief amongst British politicians that a rejection of Boris Johnson is a rejection of Brexit. And unfortunately, fortunately, whatever side of the coin you sit on, good for you. Brexit was a majority decision by Brits based on those who showed up to vote. And it may not be the best look if the person who helped campaign and push forward this idea that more than half the country agrees with is then kicked out by government officials. So there's a bit of needle threading going on here, and it'll be interesting to see over the course of the next few weeks and months how the British government handles this and how British citizens begin to respond. Time will tell, I think. This is in the same way that we heard the rumblings of Brexit back in the summer of 2016. This is, I think, the precursor to whatever the end of the Boris Johnson era in the UK looks like. This is sort of the beginning of that end, in my opinion. How it ends, how long it takes to end, and what the final results are remain to be seen.
Yeah, I think, one of the other interesting facts here is that Boris Johnson was one of, if not the most popular potential prime ministers during his rise to power. So when he was amassing this support, he was extremely popular. He also has a reputation as being, he had this nickname, the sort of the Teflon prime minister, because he could just wriggle out of any political controversy. But he's finally been done in. I think it's also interesting just in terms of the world stage. You know, the UK was the most powerful country for a huge period of modern history, right? There was this saying, the sun never sets on the British Empire. The UK had, owned Canada, Australia, many other areas. They owned the Spice Islands at one point. And over time, we've seen this significant decline on their power over time. And I think that's interesting within the context of the world stage we're currently in. As you said, this is a G7 country. So there's the question of whether the decline will continue, whether the UK will kind of rally and then maintain its current significantly decreased status on the world stage, or whether it will, as I said, continue going down. And I think it's relevant for the US as well, right? People can't imagine the US not being the major superpower in the world, but within our lifetimes, I am sad to say, I think we may see that. And so there's lessons to be learned here for us as Americans on what can happen if you have too much hubris.
What's up, Chris?
What's up, guys? Happy to be here. Go ahead.
Oh, I want to keep kind of discussing this point because, like, not Chris, P, you forgot to mention, the best territory that the British Empire ever owned, held true to themselves, were the 13 colonies that rose up just a few centuries ago. But besides, the greatest British territory, for whatever reason, actually, I want to frame it like this. So I talk a lot about how Bitcoin has been a leading indicator for the NASDAQ and the stock market. There's a case to be made from a societal aspect that the British Empire and the British government and the way Britain has just handled their society is a precursor to how America has handled its society. And you could go as recently as 2016. And the Trumpian candidate, which was Boris Johnson, winning, was a precursor and a warning to America that, hey, these ideas that you on the far left may not necessarily think are attainable, rational, or reasonable. There's a half of the country that actually disagrees with you and does take that stand. And lo and behold, it's rolled true. I've made my feelings on this show very clear for time and time again. I think Trump is a deplorable human being, but I wonder if this is a precursor to how American politicians will see how to handle people they don't agree with. Whether it's right or wrong, I'm not saying. I'm just simply pointing out that we in America have a habit of no original ideas. We just literally steal ideas from every other culture, and a majority of the ideas we steal come from the UK. So the question I have to the two of you is, does this have any impact on the way American politicians handle stuff domestically?
You're muted, P.
Fuck. I don't think it will. I think this is sort of turnover on the world stage. I don't think this is going to affect how this country's politicians do anything, to be honest. It's my off-the-cuff answer.
Yeah, I don't think it's going to affect it. I think Americans, like to Q's point, are very headstrong, and I don't think that they're going to change their ways. I guess the one thing that was interesting to me, and we talked about this a little bit before, that it's interesting. I know that he was stepping down, but Boris Johnson was routinely compared to Trump when Trump won. And it's interesting that I know for Q's example, I think if everyone was saying they hate you, Trump would still be stubborn and not step down. I mean, the dude was impeached twice and didn't step down. So for what that's worth, I guess I thought Boris Johnson would follow a similar route, that even if everyone's stepping down, he would remain in power. I just think most politicians are power hungry, and it's going to be interesting to see where he ends up next. he may be stepping down as prime minister, but it seems these career politicians never leave. So it'll be interesting to see where he ends up next and what he does next, basically. Or maybe
But
he retires.
Chris, do you really think that if, like, Trump got impeached twice, sure, but he got impeached by the other party. If it was the Republicans who were leading those impeachment charges and who were leading the charge to say, like, hey, Trump, get the fuck out, do you really think that the response from Trump would have been the same?
I think he's so headstrong he would want to stay in place. That's just me personally. I don't know him, but just from his demeanor, I think he'd be like him against the world.
Fair. I mean, he now very quickly has said McConnell is like the devil. It's like, all right, fuck. Now I agree with Trump on one thing in my life. Moving on, though.
I've had enough politics for the day for a
Oh,
lifetime, to be honest.
Chris,
All right.
I'm sorry, but you're in the political segment right now. Central African Republic, everyone's second favorite country that adopted Bitcoin as legal tender. Also, the second country out of 2 to have ever done it. You know what I should have done? I should have asked Tino to go get the tape of the very first day when the Central African Republic announced they were adopting Bitcoin, and I cautioned and warned people. This is a civil war torn country that all it takes is one battle going the other way, and this guy is not in power and the decision gets squashed. Well, what I didn't consider is if you're the leader of a civil war torn country, you're probably not the best person. I'm making a very, very strong judgment and conclusion there, but that's my 2 cents. And yes, you can make a case saying that Abraham Lincoln was the leader of a civil war torn country.
Wait,
Fine.
You can make the case? That's literally a fact.
Hey, man, let me finish.
You were doing so good.
I was doing good until I picked the wrong adverb. But he has essentially taken his cues now from the mayor of Miami. And yeah, they're shitcoining. They're literally shitcoining now. And they're going to release their version of a token. P, if you want to give, I think P, you had more details, or Chris, one of you two have more details on this. And I'm not surprised that they're going into shitcoinery. I'm just disappointed. I think that's where my feelings sit. I don't know if either of you have any other feelings or opinions on this.
I mean, I think they're basically rolling out their own shitcoin. I don't know the technical details of it or what specific platform they're using, but essentially, or protocol rather. But yeah, this is something that we see again and again and again. And I think to your point, it's sort of a Slayer Heroes thing. We can't, as Bitcoiners, just latch on to anyone who says the word Bitcoin, even if they're a world leader. It's important that as a community and as Bitcoiners that we wait and see maybe and critically evaluate their actions, because it doesn't matter what people say. What matters is what they do as it relates to Bitcoin. And it's a tale as old as time to be like, I love Bitcoin, to amass followers, to, get people excited and then be like, buy my shitcoin, right? So we're just seeing that again. It's going to continue happening, and we need to be aware that that's generally the play.
Yeah, I'll just add my little 2 cents and then we can go to the next story. But I think many of these people that claim they're Bitcoiners are just crypto people, and they're just opportunists, to exactly P's point. It's like, I love Bitcoin, buy my shitcoin. And I think that, when any country or world leader mentions Bitcoin, the crypto people are like probably blowing up their DMs. Someone brought up a great point that even in El Salvador, as soon as Bitcoin Beach was getting radar on a map, they were kind of flew under the radar for a few years at least while they were setting up their economy. As soon as it was in major headlines, all of a sudden, all these crypto firms start showing up right outside of Bitcoin Beach. Luckily, there's many awesome Bitcoiners such as Mike Peterson and man, I'm drawing a blank, but a bunch of other Bitcoiners at Bitcoin Beach that were really building the Bitcoin economy, not a crypto economy. So they were able to thwart off the people that are crypto people, but nonetheless, they are still appearing there to try and promote their altcoin, cryptocurrency, shitcoin, whatever it may be.
I wonder if this is not a new lesson. This happened in America, in New York, and we will talk about the New York of it all in a moment, but I wonder if this is not necessarily like a template or a playbook, but this is going to be something, to your point, Chris, just because a country says, oh, we're adopting Bitcoin, doesn't mean that they can't, unfortunately, get influenced by bad actors. we saw Panama push forward some legislation that at first seemed Bitcoin positive and then just turned out to be crypto at large positive. I wonder, and I want to get your two opinions on this, is an environment that allows all of crypto to flourish better than an environment that just views Bitcoin and crypto in the way most of the world views it now, as just like a whatever thing?
Wait, sorry, can you restate the question?
Essentially, like, would you rather have or would you rather see a jurisdiction adopt everything, Bitcoin and crypto, or would you rather a jurisdiction just continue to use fiat?
I mean, man, that is a devil's fucking bargain.
Damned if you do, damned if you don't.
I guess I would rather see them use Bitcoin and crypto. I think that the problem is that it sends a very bad signal. So when somebody says, when an organization adopts both, then the shitcoin aspect of it is what they use to, make money. And there's this idea that like, oh, we can all be sort of like multi-coin, but that frame died out, years and years and years ago. So, yeah, I mean, I would rather see somebody adopt both, but I don't, give me an example. Like where are we seeing that? And,
Panama.
Okay.
That's your example, is Panama.
Well, it remains to be seen. We'll have to see how that plays out. But I expect them to do the I love Bitcoin, buy my shitcoin thing, and then when it blows up, to like blame the entire market. Now, there's also an argument that like it provides cover fire, right? Because all these things are blowing up, and basically it allows regulators or to implement legislation, guidance, laws that basically target these other securities, and they are securities. But so there's potentially an argument for it being a positive thing, but I think for the people that are involved, it's terrible, right? People are getting totally fucked by the larger shitcoin ecosystem. I shouldn't have put quotes on shitcoin. They're shitcoins. I meant to put quotes on ecosystem because it's all bullshit. So people are going to continue to get wrecked. I think, good.
Sorry. Just this rant has me now thinking in a different lens of rather than should they adopt Bitcoin and crypto, or should they adopt nothing? What about timing? We see a lot of different businesses. Like I'll mention this India story now off the cuff a little bit. India Reuters sent out an update saying that this new cryptocurrency tax is inhibiting cryptocurrency's growth in Bitcoin within the jurisdiction of India. And they've seen trading volume decline as a result, but I don't buy that, because you've seen trading volume decline across jurisdictions because we're in a fucking bear market, you idiots. So we see some of these reaches. I saw a story get trolled, I think on our company Slack channel, about how Rolex is now claiming like, oh, it's because of crypto bear market that we're seeing a decline in sales. So
that is fucking hilarious, by the way.
So my question is, do we want the adoption of Bitcoin now, Bitcoin and Bitcoin only, to happen this very second, or at the end of this impending recession? And I frame it like that because, and my answer to this, so you can copy my answer if you so choose, is if we adopt now and then things get a lot worse, they're just going to blame Bitcoin. So that's personally why I actually would like to see things wait, and would rather see everything really fall apart without Bitcoin being involved, to then have Bitcoin come and save the day.
Yeah, I mean, nobody knows what's going to happen with the Bitcoin price, right? We are at historically low levels given the where we are in the cycle and where we are in Bitcoin's history. This is a great time to buy Bitcoin. Now, whether it's going to drop lower, definitely possible. If the larger macroeconomic environment continues to deteriorate, as most of us think that it will, we should expect the price of Bitcoin to go down as well, because everything is tanking. I think it's hilarious, to your point, that Rolex is blaming crypto for, again, quote unquote crypto, for the decline in their sales. Like, what the actual fuck? Like, if they're not, using crypto as a patsy, I don't know what, it's just ridiculous. But to be clear for our audience, there is Bitcoin, which is this revolutionary asset. It's a system that solves the Byzantine generals problem. You can look it up. It disintermediates the process of exchange of value, and it, is censorship resistant. There's all these things that make Bitcoin amazing. And then separately, there is the larger, not larger, but the cryptocurrency ecosystem. And we call those shitcoins because they're all just like pump and dump schemes. And what happens is people love to basically try to, what's called affinity scam. They tie Bitcoin into their shitcoin scams, and then they profit off that. So we're going to continue to see that. It's the way the world works. I think that people should be DCAing into Bitcoin. Again, not trading advice, not financial advice. Do your own research, blah, blah, blah. But we're probably not at the bottom of the entire world, recession. So, I would love to see people buying Bitcoin at a price that they're never going to regret. But when that's going to be, we don't know. So DCA is the answer. I think this is a fantastic time to leverage into not to use leverage, but to step into Bitcoin. But let's go to our next topic. What else we got?
Just a quick reminder, nothing we say here is financial advice. If you listen to three talking heads on the internet and make all of your financial decisions based on that, you are a fucking moron. So do your own due diligence.
Buy Bitcoin.
Buy Bitcoin. Just one final point to pick on New York and pick on Eric Adams. Like, Eric Adams did exactly what CAR, they're half. The CAR president is like a half president. He's only president of half the country because they're literally in a civil war. So the CAR's half president did exactly what the mayor of New York City did. I'm going to get paid in Bitcoin. 1 week later, I'm going to get paid in Bitcoin and Ethereum. 3 months later, Bitcoin mining bad. Like, you're a fucking idiot, Mayor Adams. P, do you want to just Cliff Notes summarize? I'll give you a 60-second mic to just recap the spaces that we had last night, that you can all go back and listen to as well, the conversation we had with some of the BPI folks.
Yeah, essentially, New York recently passed a new law that we certainly were like, oh no, they're cracking down on Bitcoin even harder. And the reality is, the excellent analysis by Margot Pez really pulled it apart and established that they are not giving themselves any new authority or power that they didn't already have. Excuse me. So the reason that they did this was to send a signal to basically bash on Bitcoin further, but it doesn't actually do anything. It is literally a psyop, and they just don't like the idea of Bitcoin. And what we talked about a lot yesterday is that these arguments are not based in reason and logic. They don't actually address any real issues. The sort of ESG narrative, the idea that Bitcoin is bad for the environment, patently false. And you can debunk that in so many different ways. And so these are not actually about the facts that are being stated. Excuse me. It's an emotionally based, non-factual attack on Bitcoin. It's just FUD. So that's what we talked about. Go back and watch the recording and review the epic report by Margot Pez, BPI member. Well, let's keep going. What's next? What we got?
So Robinhood, as anyone who attended the Bitcoin conference or got a chance to see their announcement made at the Bitcoin conference, which is available on the Bitcoin Magazine YouTube channel. So after this episode's over, feel free to go watch it. If you have not already, you can officially now self-custody your funds off of Robinhood. This is huge because I was banging the drum for as recently as last week, telling people stop buying anything, especially Bitcoin, on Robinhood. I'm a big proponent of do not buy your stocks on Robinhood either, but conversation for another time. It is very, very good. And I think this is further validation that if people speak up and ask for certain things, such as we want the ability to self-custody. Hey, Robinhood, you're going to lose a market share because you don't offer this ability. The market spoke and Robinhood responded. This is a net positive, I think, for Bitcoin self-custody. I think this is the best thing to happen to Robinhood this calendar year. It might be the best thing to happen to Robinhood in all of 2022. But again, conversation for a different venue.
No, I think it's a great point. And I think it is worth whether or not, and I think you're right, it's bowing to sort of market pressure. The fact that Robinhood has finally allowed people to withdraw their Bitcoin is huge. And I think they should be celebrated for that. And I think other exchanges, other apps that don't allow that yet should be encouraged to do so. So way to go, Robinhood. You finally made good on your promise and it's awesome. To be clear, again, for new audience members, the issue is that Bitcoin is this revolutionary asset that allows you to actually take full custody of your value in a way that is incredibly easy to transport and is very, very, very secure when used correctly. And so a lot of apps basically said like, oh yeah, you can buy Bitcoin, but really you were buying an IOU and they wouldn't allow you to actually withdraw your Bitcoin and send it to your own wallet where you had custody of it. And Robinhood has been talking about doing this for a while and they finally implemented it. So it's fucking awesome. More places that allow you to buy paper Bitcoin should allow you to withdraw.
I know Chris is our resident Robinhood user and Bitcoin buyer.
I am absolutely not a Robinhood user. I was at one point, but this is, once again, I will caveat, we've said it a few times, this is not financial advice. I would personally, I agree with Q's sentiment. Do not use it for your stock trading. Do not use it for your Bitcoin buying or whatever. I give it props to the users that were stuck on Robinhood and didn't want to generate a taxable event by selling it in order to buy on another platform. Withdrawing it is not a taxable event. So this is very beneficial to them. But once you withdraw all of your Bitcoin that you have on there personally, like I said, not financial advice, that's what I would do. If I had any on there, I would withdraw it and then I would delete my account. That's what I would do, not financial advice. There's a whole host of other reasons why I would not use Robinhood. Some of them just that they're enticing you to trade into other crypto assets or stocks or whatever. I just don't think that's very good. I don't think they have great education on Bitcoin. So I would prefer to use other platforms like Strike. I know we use it a lot of times. We're not sponsored by them. We would welcome sponsorship from Strike and the team. Swan Bitcoin's another one that people use. What other platforms? Those are two. If you want to do non-KYC BISC or RoboSats are ones that I like using and have used in the past.
Cash App is amazing.
Yeah, Cash App is a very good alternative as well. But those are just our recommendations. Like I said, not financial advice.
All right, people get it. We don't have. People understand this is not financial advice. It's life advice. Don't fuck this up.
Don't use
I mean, look, if you couldn't tell, we've had a long conversation with our in-house attorney. And also, like, we all lost our Bitcoin on a boating accident, so we're like flat broke again. Yeah, so like, you can't sue us.
Yeah, I did.
Like, we're useless.
I actually lost mine. I did a flip on a flaming jet ski during the 4th of July. The jet ski exploded. I have burns on 50% of my body, everything below the waist. So my crotch, my loins, everything else just gone, crisped. But in the same time, I was not custodying my Bitcoin effectively, and I lost all of it. So
every time I visit P, I just go over his house. I take a drill. I go to all his cold cards, just drill it right through. And then afterwards, I find his seed phrase. I post a picture online. I do all these things so that way P never has any Bitcoin.
Can we talk about so the scammer bots? Okay.
Yeah, wait, listen, I want to talk about this actually.
You saw the one I'm about to reference, right?
I've got to send it too.
No. We're talking about something different. But like, okay, scammers galore out there, guys. First and foremost, never fucking send anyone a Bitcoin because they promised you two back. That's scam number one. Scam number two, don't click fucking like weird links from people you don't know. Those could be phishing scams and they could fucking rip all of your information off of your phone and you're fucked. Don't do that. Don't fucking send money to these people who are asking for, like, just don't. I'm sorry. My heart goes out to the people who actually need it, but protect yourselves, private security and safety. Now the most recent scams have started to be like these students being like, oh, I have this amount of Bitcoin in this wallet and here's the address and here's the seed phrase. Dude, Some fucking bot responded to today's post about BM Live with a screenshot of their fucking wallet address. Wild.
Yeah.
I'm like confused as to why, other than, oh, if you try to enter this wallet, you're just going to get phished all of your info.
No, so like there's one that I have been seeing lately where it's basically it uses like Tron or some other like random token, and what happens is like there are funds in the wallet, but you need to send some shitcoin into the wallet in order to pay for the transaction fees, and then what happens is, you know, people see that there's actually funds in the wallet, they're like, oh, dope, and then they send the whatever the shitcoin is in, and then immediately it gets withdrawn. So that's a version of the scam I think you're talking about. And yeah, it's all bullshit. It's all bullshit. Anything that seems too good to be fucking true is definitely too good to be fucking true. The one you mentioned that gets a lot of people is basically there are like YouTube live streams that basically will like, they'll be, you know, title like, Michael Saylor says the price of Bitcoin is about to crash. And then they'll like say like, oh yeah, send us your Bitcoin. We'll double it because we're trying to promote this important message. And sometimes they're very convincing because what they will do is they will find videos of, you know, Vitalik Buterin or Michael Saylor or whoever's popular in the moment for doing something on Twitter. And then they'll replay old clips, presenting it as if it's live right now. And then like it brings people in. So again, don't fall for scams. You know, watch your shit, be careful. Let's keep
Joke's
going.
on them, because I watch all of the content online that I know that I've seen this clip before. So
They're not targeted at you, Chris. They're targeted at newbies.
everyone's targeted for my Bitcoins that I already
That's true.
lost. So.
That is true. Bitcoin is for enemies. Trust, don't verify. Don't get wrecked. What's our next topic? Let's hit it.
P, this is actually for you. Blue Wallet, I believe, has some new updates.
Yes. Blue Wallet just announced that they support LNURL auth, which is it's sort of an addition to the you know, standard sort of Lightning protocol. And what they've added in allows you to log in to websites by using your Blue Wallet, basically. It allows you to use their hosted node as a way for you to authenticate. This is really cool. I won't go into too much technical jargon here, but essentially it's a further evolution of what is possible with Lightning, which is a layer 2 on top of Bitcoin's base layer. So it's very, very robust, and I'm super excited for more mobile wallets to support things like LNURL auth, which you know, allow you to verify your identity without associating it with some KYC bullshit. So props to them. Let's see more of it. I'm excited.
This is great. This is exciting. You love to see it. I mean, what's the saying? You build in the bear market?
Yeah.
Something like that?
Yeah.
I don't know. First bear market.
No, you're right. You're right. In the bull markets, that's when all the bullshit happens, right? Everybody's like, oh, crypto bullshit. And then everybody's trying to make money. And it's super distracting. We all get real excited and, you know, bashing on people that are trying to fuck over other people. And in the bear market is when, you know, everybody's able to really focus on improving the protocol, improving apps, and getting shit done. So it's good news.
Our next story is a clickbait title. So I will warn you, saying that if you see the title of Celsius Network fully pays off Bitcoin loan as user funds remain locked, this is clickbait. The real story behind this essentially is that they have taken one loan and reintroduced a new loan to cover that, kind of by using a DAO. To be honest, this just feels like the cartoon of literally putting dust under a rug and like walking away. I'm flabbergasted that Celsius is still around. Based on the most recent Bitcoin that they introduced, they will have to file for bankruptcy should Bitcoin drop below $16,852. Not saying that we're going to hit that price, but I'm just saying the market wants maximum pain. And if Celsius is alive, that is not maximum pain. Just my 2 cents.
Can you say that again? What was the strike price for that?
$16,852.
Are you sure?
I heard that price is much, much lower. I heard it's down to like the 4K range personally.
Oh, interesting. This is based on Finbold's article That
Wait,
was
I'm seeing that they've paid their liquidation price down to 0
what?
on their Bitcoin loan.
What?
They have outstanding other loans, but yeah, I would assume they paid all their Bitcoin down.
No,
to
they
0.
declare bankruptcy at 16,852. That's what I'm reading.
All right, check your
All right,
sources.
honestly, this tells me what is happening is they are so royally fucked that they have to put out weird and almost, they're not in direct conflict, but this information doesn't agree with each other. And whether it's because the timelines are getting crossed or just, Celsius is so royally fucked that they cannot actually come out there and directly say it. I'm just going to say point blank, the bull market cannot proceed until things like Celsius don't exist, until Gary Vee has to finally admit he's a trust fund baby. And give me one more. Give me one more, guys. Give me one more. No.
Bitcoin miners are capitulating and have to sell or liquidate a lot of their Bitcoin in order to pay off loans.
That's happening right now. No, I need something deeper. We need something deeper. The three horsemen.
We need more
Boris
influencers
Johnson needs to
to
resign.
leave.
No, I need three horsemen. And the two horsemen I have fully established are Celsius needs to die and Gary Vee needs to come out as a trust fund baby.
Wait, sorry. Bearing the lead here. Whatever the fuck Celsius did.
Oh, Peter Schiff. Obviously. Thank you. None of your business. Peter Schiff adopting Bitcoin, which might actually happen sooner than we think, but more on that in a little bit.
Well, I was going
Go
to say, the interesting thing here is that, so to be clear, they paid down the remaining 41 million of their debt. But interestingly, they have not released user funds. That's the interesting thing here. So when the fuck is that going to happen? And it's all noise until Celsius unpauses withdrawals and people can get their shit off the exchange. And my view is they're probably never going to do that or I don't think they're ever going to do it because the second they do, everyone's going to pull their funds off and they then will be totally fucked. So I think you're right. This is noise until they actually allow withdrawals because we will see the mother of all bank runs on them and then they'll be done.
Okay, Adrian Blackburn, thank you for correcting me. The Bible is on my reading list. I have not gotten to it. So we need 4. So the 3 we have are, fuck you guys. So the 3 horsemen we have are Celsius dies. Gary Vee has to cry and admit he's a trust fund baby. Peter Schiff has to admit he was wrong and buy some Bitcoin.
I can go last one. This is like big. Like bond market goes no bid and then it start buying Bitcoin. That's like the bottom. It starts turning the other way. I don't know.
So do you want to do bonds or do you want to go ETH? Because I was gonna say,
ooh, that's a good one too.
ETH 2.0 officially says it's never gonna be released.
You guys,
that's the market bottom.
You guys are in your pipe dreams. This is not how it's gonna happen. Like these things are never gonna be like, hey, we were wrong. We're sorry. That never fucking happens. Peter Schiff's entire everything is based on gold. And there's no world in which he can, even if he believes it, right? He's probably buying Bitcoin, right? He's doing it through his son. Whatever the fuck is happening, he's not going to be able to ever pivot to Bitcoin, publicly and officially, until that will not lose him all of his income streams. So it's just never going to happen in my mind. Or we're going to see more and more kind of dipping their feet in, just like Vitalik did recently, where he published this whole tweet storm that was like, maybe it's all bullshit and I don't know what I'm doing. Like that's him sort of teeing himself up to be like, we're pivoting again. But it's never going to be like we're pivoting into Bitcoin. Like that's not going to happen because there's just too much money to be made by getting other people to continue to believe in you in these other things.
He doesn't have to publicly say he was wrong, but I do think Peter Schiff will have an allocation to Bitcoin by the end of this decade.
I just want to highlight this great post in the chat. So 12-dimensional hypercube will appear eventually, and that's the thing that will magically fix all the problems with ETH. That's the only thing, to be clear. That or time cube.
Wait, there are problems with ETH? I'm kidding. All right. So the four horsemen we have established are Celsius Network dies. Gary Vee has to admit he's a trust fund baby. Peter Schiff buys Bitcoin. And actually, let's flip this. ETH 2.0 actually gets rolled out.
These are all dumb signals. They're not going to happen. And even if they did, those are not the bottoms.
That will mark the market bottom, especially the Gary Vee one. All right. So we did the Celsius story. Gary Gensler, everyone's favorite non-Bitcoiner. This developing, or do we want to go there? Or do we want to go Peter Schiff?
Let's just continue the train. Keep going. You started it. Let's hit it.
All right. You didn't answer my question. So we're going to go Gary Gensler in the SEC. Spot ETF continues to have no signs of life. Grayscale is in the midst of its lawsuit. Chris, do you have this clip of Caitlin Long?
Yeah, let me pull it up real quick. So keep going.
So, this is a continuing story from last week. I don't know what you guys talked about it earlier this week. I mean, you have this spot ETF that is to short Bitcoin, but you won't have a spot ETF for the actual price of Bitcoin on the upside. So,
No, wait. We don't have a spot ETF to short Bitcoin, right? We have a futures-based ETF.
Correct. But that futures-based ETF is specific to short Bitcoin.
Yes.
And there is a futures-based, it's not even an ETF though.
Yeah, sorry, not an ETF. There is it's not based on spot Bitcoin. That's the thing that we want.
Yes.
We want
an
ETF that's based on spot Bitcoin. That doesn't exist yet.
Chris, play the tape.
One of the challenges is that the regulators, by slow walking the non-leveraged players, of which Custodia is one, they didn't give the market an alternative. And into that void of the slow walking that happened from the regulators filled all these fraudsters and, frankly, some criminals. And that's the regulators work both with action and inaction. And in this case, I think their inaction caused much greater problems. That was especially true with the SEC, which green-lighted the GBTC as the one and only way that folks could gain exposure to Bitcoin in their brokerage accounts for almost 6 years. And that created an incredible market distortion because it was a closed-end fund that ended up trading at a big premium to Bitcoin. That hurt retail investors, and all these leveraged Wall Street funds could come in and arbitrage that and pick off the retail investors. How was that good for the industry?
I mean, she's not wrong. It's very clear market manipulation. But you want to know a fucked up truth? Market manipulation has been happening for decades. While we in the Bitcoin space may be pointing this out now because it affects us or affects what we want to be investing in, stocks have been manipulated, played with, and fucked around for a long time. I mean, a lot of your favorite movies is The Wolf of Wall Street, for Christ's sake. That whole movie was about stock manipulation. The man literally pumped and dumped penny stocks. So I don't like the argument that, they're not regulating well. They should let this or let that. Like, they're fucking with this. They want to control that. Like, those narratives work right now in Bitcoin because this is Bitcoin's first instance of being involved in this space. What do you think was happening with all of these tech stocks in 2000, 2001, and 98, and 99? All you had to do was slap on a fucking .com and then Wall Street just pumped your fucking stock up. Like, how is that not deemed market manipulation? Why is the SEC not intervening in those instances? Well, because they can't actually stop Bitcoin. They can't stop the price of Bitcoin. The market doesn't turn off for Bitcoin. The stock market closes. Shit, it was just closed on Monday. So I think there's a deeper narrative here that is rooted around the idea that because the SEC can't actually control Bitcoin itself, cannot call up the CEO, can't shut down trading on it, can't do anything. There's a genuine fear that the purest free market being introduced, this is purely speculative, but a fear that the purest free market to actually be introduced to the public markets would disrupt the rest of the public market in a very jarring way. And I think there's a layer of that happening that just won't ever be discussed publicly, but tinfoil hat off.
I don't know why you switched to me.
I mean, I was hoping someone else would have a comment because I was done talking.
I got nothing.
Cool.
Next story.
Chris, anything to chime in there?
Roll the tape.
No, I think you did a great job with that. I think market manipulation has been going on for decades. I hate saying that, but it's true. The truth hurts. And,
no, since before, even for more than decades, like since markets first were created.
Millennia.
Yeah, totally. Like this, I'm not trying to make it seem as though this is like an American stock exchange or New York Stock Exchange issue. No, this has literally been for a tale as old as time.
Well, I guess I want to add on that. I mean, SEC's been around since what? The 1920s, 1930s. So it's been going along at least 100 years with them regulating things and managing things. So it still goes on even with this regulatory body.
Yeah, I think it's all bullshit.
Thank you, Q.
Yeah, I think the problem when you ask the government to keep you safe is that it almost never ends up working out the way that you want it to. People that are in power will bend the rules in order to keep themselves happy at the expense of everyone else. We see this in every industry. We see this with the sort of revolving regulatory door, the iron triangle or whatever it's called, where people work in, for example, and not limited to the pharmaceutical industry. They're like CEOs of major pharmaceutical companies. And then they're suddenly the regulators in the government that are responsible for making sure that pharmaceutical industries, do things right. And it's like, come on, like you think those ties all get severed suddenly and the people are not, pumping their own bags when they can control what is deemed as okay and not okay. So loopholes get created. These systems, are almost always manipulated and to the advantage of not us. Free markets are the answer. All right, what do we got next?
So on the topic of, regulators messing with you and fucking with you, I know that you and Chris spent some time gabbing over Peter Schiff and his most recent foray with banks. I just want to dunk on Peter Schiff. Chris, if you can pop up this little tweet that just made me laugh so much yesterday, made me so happy, and I hope this makes you happy as well.
Oh yeah, this is classy as fuck.
Oh, wait. Chris, I need you to remove all of your title and stuff because everyone's missing the most important part.
No, we see it.
Well, can you actually see the number though?
Oh, no.
Okay. Sorry, Chris. Boom. The hardest of ratios. Oh my God, this is actually even bigger than I saw it last night. Peter Schiff trying to dunk on Saylor and Bukele just claps back. How's your bank going? With 10,000 more likes. Bitcoin Twitter showed up strong last night, to say the least. But look, do you think Peter Schiff will actually opt to capitalize on what Bitcoin has to offer and the fact that it's censorship resistant, the fact that no intermediaries can stop a transaction, or will he just double down from here? No.
The point is, Peter Schiff is probably already owning Bitcoin. His son owns a bunch of Bitcoin. Whether or not they are actually in conflict or it's them basically drumming up conflict, which is a very effective way to sell anything, right? You pull someone's emotional strings and they get engaged. So I don't know what's going on between him and his son, but I would be shocked if Peter Schiff did not actually own Bitcoin, right? There is a huge difference between what a public person presents publicly and what they're doing privately. And it is only an illusion that those two things run in parallel, because they don't. And so again, as I said earlier, Peter Schiff's entire business model is based on him being a gold bug. Everybody who is involved in gold and doesn't understand what Bitcoin is, they're so fucking close, right? Like gold bugs are like, oh God, we need something that is not controlled by the banks and blah, 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 blah. And then they just many of them don't quite make that final step. And Peter Schiff is not going to make that leap because he will alienate the base that he has spent many, many, many years, if not decades, building. So he's going to do that privately. He is not going to publicly embrace Bitcoin in the near future.
It's funny, like Peter Schiff though, he doesn't even buy his own story that he shills. I mean, he says max you should allocate to gold is 5 to 10%. And then the other 90%, people are like, well, what are your thoughts on the US stock market? He's like, the dollar's going to collapse. US equities are overpriced. So I buy things abroad. It's like, so you buy things abroad as their economies hyperinflate, they default on debts, or they have other issues. Like it's exactly what like, and to bring in like Michael Saylor's thing, Michael Saylor had money in a bank in Argentina. They saw hyperinflation, economic collapse. They defaulted on a lot of their debt payments. And then they basically confiscated your wealth. They printed a bunch of money and devalued it like 20 to 1 or 10 to 1, whatever it was. And then they gave everyone the new currency that they were issuing at the devaluated rate. So Peter Schiff's so funny because he's still like, oh, definitely, go into banks, go into, emerging market equities, buy just 5 to 10% of gold. Like he doesn't even believe in gold as it is. If he really believed in gold and the collapse of it, he would have all of it or 100% of his net worth. And then now this is the thing that he sees right now is that they confiscated his wealth regardless. He doesn't even live in the U.S. He lives in Puerto Rico. I know it's a U.S. territory, but that's besides the point. I don't know. That's just my rant end there.
I wonder if DB and him like casually get together. No? Cool. All right. Sorry, DB. I hope that didn't piss you off. Let me keep my job, please. Miners in Texas. We hear a lot about energy usage, but last summer especially, we saw Bitcoin miners really step up to the plate and help out the Texas power grid. And it looks like a lot more of the same is going to be planned. They're going to be using batteries to aid the grid so that the grid doesn't get drained by having to power these miners. This just, I think, further validates my previous claim that Bitcoin miners in particular are incentivized to find the cheapest energy source at whatever that energy source may be. And it will absolutely vary based on location and access to energy. So I think Texas and Bitcoin mining out of the state of Texas in particular, mind you, this article said crypto, but fuck that. So Bitcoin mining out of the state of Texas in particular will be, I think, the forefront for the rest of the world as to how it's handled and what opportunities are there and different ways that energy can be capitalized and used towards mining Bitcoin.
So I think this is important to dive into because this story is strange to me. One, as you said, they're talking about like crypto miners. So I think we need to be careful. I don't know Lancium. I don't know if they are Bitcoin miners or larger crypto miners. I'm assuming based on the framing of this article that they're mining shitcoins. And so that immediately I'm turned off by that. The other thing is this is very strange. It sounds like they're buying batteries, which is a significant capital investment, to continue to mine their shitcoins when there is peak demand. The whole beauty of Bitcoin mining is that you can turn on and off your ASICs whenever the fuck you want to. So I just don't understand why they would need to. I mean, I'm probably missing some critical piece here, but why not just turn off your miners when there's peak demand, turn them back on when we're not in peak demand, and then go from there? I'd be curious. I mean, there must be some cost benefit analysis where it's like they're going to make more money by continuing to mine during that period, but it just it seems strange to me.
P, I can talk to this coming from the energy sector. This is a beautiful example of over-engineering. So basically what they're going to be doing is they are going to be producing power from whatever source, it doesn't matter. They're going to be loading that energy that they do through the batteries, most likely. And then also so it's basically the power plant, the batteries, and then to the source that it's going. So the source is the grid. So basically they're going to be overpowering or surging these batteries. And then in the event that the grid goes down from a hailstorm or whatever happened in Texas last year, they can then take that energy from batteries and then put it into mining. But to your point, it's kind of a waste because one, you have to keep upkeep of batteries. Two, as you're charging a current over the course of a battery, you're actually reducing the ability to hold charge. What I mean by that is obviously a lot of the phones have gotten much better at this, but phones back in the, mid 2000s, when you like overcharge them, when you plug them in overnight, you notice that like if your phone lasts 8 hours, then after a year it only lasts 7.5, 7 hours. You're like losing the capacity of the battery just because you're feeding current through it. I don't know the electrical engineering terms of it, but I know that's what occurs over time. So this is kind of a cool thing to store it. But to your point, like you're allocating a lot of capital to do this. Like what was it? It was 300 or 25 megawatt facility, and I don't know how much with an option of, this was 200 megawatts of batteries of capacity. So that's like a huge expense for just a facility that's only doing 25 megawatts. But it just seems like a misallocation of capital. I think they'd be much better off buying a bunch of ASICs, plugging them in the event that something happens, they turn off the ASICs. That's just me. That's what I would do as an engineer. But
yeah.
I don't know.
Yeah, I think so. It looks like I'm just searching right now. It looks like Lancium is actually a power generation firm, and they've added this thing in to sort of offset capital costs. I think this is just, it seems like this is just an ESG play. It's basically like, how can we make ourselves, more resistant to the bullshit ESG claims that are being made? And I think that's probably a mistake. I think that the answer is not like play the game within the existing system, because then they're incentivized to basically to promote ESG narratives, right? If you are making significant expenditures to insulate yourself from the PR risk of mining Bitcoin, then your strategy becomes, you are incentivized to FUD people who are mining Bitcoin more efficiently by not having batteries. And so it creates this weird incentive structure that I just don't see any benefit in. Now, again, I haven't looked into this story in detail, so I may be missing something, but I don't understand, to your point, Chris, like why they would invest in batteries specifically to be able to mine Bitcoin when you can just turn them off and turn them on again when you're not in peak demand.
Let me ask you guys this, and I just did a quick Google, so I don't necessarily, if what I Googled is actually accurate, this becomes just sadder and sadder very quickly. They're saying that this will give them about 200 megawatts of power for Bitcoin mining, but like how many ASICs does 200 megawatts of power actually concurrently charge? Do you guys know by chance? Obviously, it depends on maker model. So a quick Google search that 1,109 ASICs we multiply the amount of machines by their kilowatts. It requires 86,000 kilowatts to produce one Bitcoin with S19 Pros, and that was with 1,000 miners. So if they're only going to produce 200 megawatts, I think you're looking at like 2 miners being charged. So yeah, that's exciting. 2 miners that they're going to charge with their wind and solar charged battery packs. Way to go, guys. Way to go. That's all the news stories I've got, guys. Any other final points?
Nope. I think we're good.
Cool. Before sorry, what's up, Chris?
Hit it.
I'm good. Go ahead.
Before we jet off and give you guys a new episode of Fedwatch, I want to remind everyone that the latest issue of the print mag is available at the store. This is the censorship resistant issue. Grab your copy of the Bitcoin Magazine store. Use promo code BMLive and get 10% off. If you're not subscribed to the print mag, go ahead and get your annual subscription locked in now. We'll be back after a commercial break for a new episode of Fedwatch. Thank you all for sticking around through that commercial break. And now I turn the mics over to Ansel and CK for another episode of Fedwatch.
Q, thank you so much for the intro. Happy to be here. We're calling in from the Nashville Bitcoin Magazine studios and offices. Ansel, how you doing, my man?
I'm doing awesome. Great 4th of July for me and my family. I hope you guys all had a great 4th of July. Back to it at a new time this week, but we'll be back to Tuesdays next week. This is Fedwatch, the macro show for Bitcoiners. We got a big lineup today. So we're going to talk about commodities, the dollar, Credit Suisse news, BIS news. We have a Q&A section at the end where we solicited some questions from Twitter. So lots to get to. Christian, how are you doing, man?
I'm doing good. I mean, it's so exciting these days in the markets, in the world. Like, there's just so much happening, whether it's just chaos, whether it's war, whether it's protests. It really does feel like a fourth turning, if you will. And I mean, just seeing Bitcoin interact with all of this, it's fascinating, but also as someone who has a lot of skin in the Bitcoin game, a little scary as well.
Yeah, I keep waiting for a slow week where we can continue our series on like maybe some of the different institutions out there in global macro. We did the WEF. I would like to do the IMF and things like that. But man, every week we just have a jam-packed show. And next Tuesday, so coming up this Tuesday, we're going to have Joe Carlasari on. And it's going to be a great show. I can't wait. I'm excited because he has been saying we need to kill all the narratives in Bitcoin and come up with some new stuff. And I'm kind of right in that same boat. So that should be a really great show next week. Also, I did throw a bonus episode of Fedwatch out for podcast listeners. So check your podcast app. That is episode 101, where I went over fragmentation in Europe more in depth, because when Christian asked that on the last live stream, I stumbled over my words. I didn't answer it correctly. So I wanted to research that and come out with a better episode. So I answered that more in depth. Check it out on your podcast app, Fedwatch Bitcoin, in any podcast app. So yeah.
Hey, before we get into it, we're going to be talking about what's happening globally. I will be remiss if I don't talk about what Bitcoin Magazine is doing globally, which is we're taking the Bitcoin conference and we're going to Europe. I think what we're seeing in Amsterdam, and we'll touch on this later in the show, is showing something that we've talked about a lot on this show, which is that Europe is unstable. And we've also seen that Europe, at least from a big government and central banking perspective, is pretty hostile against Bitcoin. So I think that there's a need, one, for Bitcoiners, and there's a very strong European Bitcoin contingent out there to, show the world that Bitcoin is important and Bitcoin is important to Europe's future. And then two, for us to continue to analyze what's happening in Europe, because as all of us know, Europe, for all recent history, has kind of been the heart of where conflict kind of breaks out. And I think that's true still today.
Yeah, great points. I think, it ties into the last episode when I talked about fragmentation in Europe and how Bitcoin is going to make it easier for countries to leave the euro. Now, I wasn't talking at that time about the Netherlands. I was concentrating more like on Italy and stuff. But as countries leave the euro, which they eventually will, adopting Bitcoin will ease their transition to being more independent. So I think it's a nice tie in there.
So again, to all the audio listeners, you can see the slides that we're going to share as we continue the show on YouTube and Rumble and everywhere else that we post our videos. But let's jump into what's happening in Fed and U.S. news. And again, I think we're gonna start showing a nice array of charts here. So Ansel, back to you.
Yeah. So with the first few charts here, I wanted to highlight that unlike Europe, that is facing these really acute pressures right now, of course, with the protests and the energy prices, the U.S. doesn't really have any of these acute worries that we see over there in Europe. The biggest thing, I think, over the last 7 to 10 days has been a shift from inflation fears to recession fears. So if you got, Chris, can you bring up slide number 1 there? This is showing the GDP Now forecast from the Atlanta Fed. And this came out last week, and it kind of really wowed the market. It really shocked the market because it went all the way to -2%. This is annualized GDP for Q2. This would make the second quarter in a row of negative GDP, which is a technical recession. Of course, right when this came out, I saw a couple headlines saying, well, we need to revisit what we consider recession. Is it 2 years? Is it 3, 4? How are we going to redefine what a recession is? And I think that's funny, right? At first hearing that's funny, but also maybe we should, because we are ever since 2008, we are in a different global economic climate, with the great financial crisis and then Bitcoin coming along. Maybe we should revisit what we mean by recession, or are we in a depression? Let's talk about this. Let's have this discussion and see. But a lot of people
Ansel,
go.
Well, what are your thoughts here? Just tell me, if you were to rethink these terms, ideas, concepts, what makes the most sense to you?
Well, I don't know. I mean, if you have a recession, 2 quarters of negative GDP growth, like 3 times in 6 years, and the other times you're only getting up to like 1 or 2% growth, to me, that sounds like a depression, right? It doesn't sound like there is really any recovery. It's just recession after recession. So Emil Kalinowski on Eurodollar University, he calls this the silent depression right now. And I like that. I think we probably should roll into calling this a depression.
So you're not saying revisit terms. You're saying, we need to snap out of this. Like, we have gone way past a recession, and this is now, a depth of a long depression that's playing out.
Yeah, but if we just start with the conversation about, hey, let's talk about what recession means and all this, I think you'll broaden that Overton window to start maybe talking about this is a depression instead of a recession. So I think that. Another thing that people were talking about with the recession fears is nominal versus real GDP. So for listeners out there, nominal is just measured in dollars. So if the prices go up, like CPI goes up, you would expect, an even GDP would actually be higher because, all prices are rising. And real GDP would be inflation adjusted or CPI adjusted. And right now, some people I've seen out there say, oh, well, we still have 6% nominal growth, right? Nominal growth when not adjusted for inflation, but it's 2% real GDP. So I think we're going to see some confusion or back and forth over those numbers. But in the grand scheme of things, right now, there is nothing acute like there is over there in Europe. So Europe is definitely kind of the center of global macro attention right now. Things coming up for the Fed, CPI next week on Wednesday. And we will be doing the live stream on Tuesday, so we won't be able to react to the CPI, but perhaps we can talk to Joe Carlesari a little bit about what he's seeing in CPI. And
maybe
then
we need to do a bonus show. I don't know.
Yeah, maybe we'll do a bonus show that week. And then FOMC is going to be meeting. That's the Fed Open Market Committee. They will be meeting on the 27th. Important about this meeting is they do not have a meeting in August. So it's going to be a 2-month break between July policy rate decision and September. Also, September is typically like the end of third quarter is when we see the most kind of stress in the system. And I don't know why. That's probably a holdover from old futures and old type of the way the economy was around harvest season and stuff like that, they had this cyclicality. Also, the federal government's fiscal year ends in the third quarter. So, and there's a lot of the economy has government contracts and stuff. So there's the end of the third quarter is where we do see a lot of stress build up in the system. So the FOMC doesn't have as many meetings leading up to that and possible pivot or whatever they're going to do. So I think that's important. And that's all I have before we jump into the charts. Should we jump into the charts now?
Yeah, no, let's go.
Okay, so going to slide 3, please, Chris, this is the dollar. And I think we were probably the only Bitcoin show that was talking about strong dollar for the last couple of years. And man, is it just ripping people's faces off right now. There's not much to glean from this chart other than the shape, in my opinion. And you can see it's just going parabolic. So we don't know where the top is, but I think that the top is getting closer in time because, parabolic moves end in a blow off top usually. And whether it's a blow off top or just a consolidation for the dollar, I don't know. But I do think that the time is getting closer that we do see a topping in the dollar. If you go to the next slide, Christian, just stop me whenever you want. This is I just took some Fibonacci stuff for the last two big bull markets in the dollar. Those are the ones that ended in the dot-com bubble, and then the one that started with the great financial crisis. And I know a lot of people don't like technical analysis and stuff, but Fibonacci is it's a series, it's a number series, and how it works, whether you think technical analysis works by self-fulfilling prophecy, or maybe it's part of our like internal mammalian psyche of some sort. These things, it's uncanny the way that these two cycles worked out. So if you go from if you measure out with Fibonacci's the last two big bull markets, they both ended roughly around the 1618 line. And if you measure that out for this move, then it would take us to about 112 to 115 or so on the DXY, which I thought was interesting. And it's just at least a point for us to be watching out for, that could be a point where the dollar kind of reverses. A lot of people don't like the DXY because it is a narrow measure, mostly against the euro and the yen and the pound. So I included a chart on the next slide about the broad trade weighted dollar. This is 26 currencies weighted by how much the US trades with them. And I think it was last updated like 2018 or 19. And you can see this is also approaching a top. Other than coronavirus, I think this is the highest that this trade weighted dollar has ever been. So it's not just the DXY, it's also other measures of the dollar. If we go to the next chart, perhaps you don't like fiat to fiat comparisons. So I put gold in here, and you can see it really broke down out of the support that it was kind of holding for about a year. And it is right now 10% below its 2011 high. So holding it for 11, 12 years, and you're down 10% on that investment. That's I don't know. I don't know why people buy gold anymore, but this does show that it's not just the, fiat to fiat. It's also gold to fiat. And interesting, if you look at the euro to gold price, it is up year to date by 6%. So that fits right in with the dollar not being really inflationary, and that it's gold is sinking versus the dollar, but rising versus the euro. Next slide. This is the last currency slide that I have, and this is Bitcoin. And you can see we're kind of bottoming out here right around those 2011 highs, the previous cycle high, and it looks to be breaking out. So we'll see. I think Bitcoin might be some sort of early indicator for risk assets in general, because we do see possibly a bottoming in stocks, a bottoming in bonds, and things of that nature. So this could be showing that the worst for at least U.S. financial markets is over for the time being. Christian, lots of charts there. Throwing it back to you. What do you think?
Yeah, well, I want to say first and foremost, it's pretty clear that inflation is not exactly what people have made it out to be. And I think the fact that so many Bitcoiners have leaned against potentially incorrect narratives, it's going to hurt our reputation in the immediate term. And we're maybe even seeing a little bit of that, where people are like, oh, Bitcoin was an inflation hedge. Oh, this didn't happen. Oh, this didn't happen. The narratives were wrong. I know that Joe Colasari is going to come on to talk about that next week. But when you see the dollar doing what it's doing, and yet prices are still going up, there's a lot of reasons that can happen. And, we're having supply chain destructions. Like, obviously, if supply chains are not as efficient, things are going to get more scarce and more expensive, and it's going to get harder to make things. things are very complicated to make, whether it's your car seat, whether it's a desk, whether it's a computer, whether, all these things that we take for granted are really complex to make and require sophisticated supply chains. So when those supply chains break down, when trade stops, that makes prices go up. And that really has nothing to do with quote unquote inflation. We are the only Bitcoin podcast, maybe not the only macro podcast, but one of the only Bitcoin podcasts that has been calling it out just like that the entire time. So I do want to call that out. So, I mean, Ansel, obviously you are the signal here. I just kind of ask the dumb questions and give my 2 cents. But why do you think we've been able to kind of look through the fog so effectively?
Yeah, well, I just think it's you have to have the proper premise, the proper assumptions that you base your macro forecasts on. And I think a lot of people have been saying that QE is inflationary and fiscal spending is inflationary and all this stuff. It's printing of money. Now, it does make prices go higher, but is it really printing of money? Since it wasn't printing of money, which has been my kind of my position, is high prices just lead to recession, right? Because high prices mean that you can't afford so much. And so you pull back on your demand and that crashes the markets. So if you thought that QE and fiscal spending were inflationary, you got this wrong. That's my opinion. But you did come up. I wrote a few things down when you were talking there. Is the markets? Yeah, they have inertia, so they can go on a little bit longer than you would expect in a certain direction because prices go up for many different reasons. So there's inertia. There's also undershooting and overshooting of certain things. But in the grand scheme of things, they will return to the mean of whatever the true macro situation is. So, yeah, those are my comments there.
I do want to say that outside of just looking at DYDX gold, some of these other indicators, with doing Bitcoin Amsterdam, we are selling tickets, we are pricing sponsorships in euros, and we're almost 1-to-1 with the dollar. So it's really easy for us to do the math on that when we're doing our accounting. And as far as I've known, the euro has always been like $1.20, $1.30. At one point, it was almost worth $2. So pretty astonishing seeing the currencies trade at parity when historically the euro has been more expensive than dollars just directly in exchange.
Yeah, I think that's a psychological level too with the market. If the euro can't hold parity and it drops to say 99 cents, oh man, it could be an avalanche after that. But then I think it will overshoot and it will have to come back to the general trend, which is weaker euro, but not that fast. It's not going to drop overnight. It's going to take a couple years probably for it to, move 25%, and it shouldn't move 25% in a week. That would be a major overshoot. But let's move on to some of the other charts here. Can we do that? I just want to
Let's do it.
Keep on task here. So slide number 8 is we're getting into commodities here, and this is cotton futures. There's been a lot of talk recently about cotton because it did break down when people weren't really expecting it. It just kind of fell out of bed, and it's down over 40% now. What I thought was interesting, though, about cotton, if you go to the next chart, is a zoomed out monthly chart. And you can see there's a very high similarity between the Great Financial Crisis price action and recent price action. So you had a big sell-off at the acute phase of the recession or the financial crisis, then a big rebound, and then a sell-off. And that's exactly what we're seeing again here. And I think this demonstrates really well my kind of theory is that we're just going to return to normal. These were just temporary shifts in the market, and we're going to return to low growth, low inflation. Let's keep going. Slide 10 is wheat futures, and wheat has returned to pretty much the levels where the Russia invasion started. A lot of people were worried about this. I was worried about wheat, the price of wheat and the price of fertilizer and all that stuff. But as it turns out, it looks like Russia is going to have a record wheat harvest this year. They also are able to export some of that stuff, wheat from the occupied areas in Ukraine, which is kind of causing some political turmoil right now. But, you want to see that wheat get out to feed people around the world. So there is a lot of pressure that has been relieved in wheat. It's just returning to normal. Next slide is corn futures. This fell out of bed, very similar to cotton. And a lot of people that I listened to in the macro space, they were going heavy long on corn. They thought this was the next thing because with oil prices going up, there would be more demand for ethanol. Also with the inflation that's people were talking about, then, they thought corn futures were going to go up. But it looks like it had a nice little head and shoulders and just fell out of bed just like cotton did. Next slide is now we're getting into some of the metals. This is copper. And we did get a question about this on Twitter when I solicited questions for this episode. So I'll just cover this here. Copper is called Dr. Copper because it has a PhD in macroeconomics, they say. Most modern things in the world have copper wiring, copper plumbing, things like that. So it is a modern metal. And if it turns over, then most likely we're going into recession of some sort. The demand for copper is falling. So if the demand for copper, one of the base metals in our modern world, then that means that demand in general is falling. You can also zoom out on the next slide and you can see I did the same thing as I did with the cotton futures, and that is just zoomed out to show the great financial crisis. And we had a big dip right in the acute phase of the great financial crisis, a big run up, and then many years of return to normal sell-off. I think we're just going to see pretty much the exact same thing this time. Next slide is aluminum futures. And that is, I think this is just a fantastic chart to show like technical analysis for a lot of people that don't like technical analysis. I mean, we had a beautiful long-legged doji at the top, and it came down right now. It's sitting right on the highs from January 2019. Just a really beautiful chart, in my opinion, and does show that, it's kind of just this cycle. Everywhere you look, you see the Corona crash, big run up, and now you see a sell-off at the end. Next slide is oil. And oil is, you have to make sure you're looking at a daily chart of oil. If you look at a weekly chart, you won't see the closes of these candles back in March. But yeah, the high was back on March 8th. And we actually had Luke Groman on the show at that time, that exact day. And we were talking about oil. So that was very interesting. We got to see what our calls were at the top. But oil tried to regain a new high, but couldn't quite do that. And if you go to the next slide, these are just my technical analysis lines that I've been following. So we had this kind of, I don't know if you call it a flag or a channel, and then a ascending wedge in there. And when it started falling out of that wedge, I was like, okay, well, it's definitely going to the bottom of the channel and it's probably going lower. And now we see it testing the bottom of the channel back, from April. So very interesting what's going on with oil. I don't know if this is going to continue selling off, but I do think over the next 2 to 5 years, we're going to see lower oil. Any higher high in oil is just going to be temporary because demand is going to fall faster than supply. And
Ansel, so oil prices going down at the pump?
Yes. I mean, I've seen it go down about 10% or so just in my local area over the last couple of weeks. That's not going to show up in CPI though, because, I think it's mainly at the end of June, very beginning of July. Even with the travel weekend, I saw multiple places where 2 weeks ago it was 479 by where I'm at in Florida, and it was down to about 440. So that's a pretty significant move in gasoline prices. And I do expect that to continue because there's just not as much demand to push, relative to supply. So in a recession, we're going to see falling demand and falling prices. That's I don't know why people.
Uh-oh. Do we lose Ansel? Looks like it. I mean, I think Ansel's completely right, though. Demand has been destroyed, hence we are in a recession. And then obviously that is an opposing effect against the supply chain destruction that is occurring. So seems pretty straightforward to me. Q, what do you wanna jump in with?
No, I just wanted to, you know, the supply chain issue is just going to continue to get, I think, exacerbated and blamed for some time. Time will tell. Time will tell.
So what do you do? What's practical to do? Let's say, the viewers are listening, they're trying to hodl Bitcoin, their dollars are going up on the chart, but everything is still getting more expensive. Like, do people start hoarding like supplies? Like, I guess, what is a person to do? What are you thinking about?
I mean, like I actually joked about this over the weekend with some friends, but we got sriracha at a dinner table, and I brought up that sriracha manufacturers have said like there's probably going to be a shortage in the near future just because we don't have as many of the raw materials we need to create sriracha. No, I'm not saying everyone go hoard your wealth in sriracha, but like if you like sriracha, maybe buy a couple extra bottles the
You
next
want
time
to
you
hear
go to the
something
grocery.
funny?
Yes.
So I've been looking for sriracha at grocery stores, and they only have the knockoff ones at this point. So I just went on Amazon. I bought 2 giant big ones. Just was like, hey, this is at least 12 months supply of sriracha. So hold me over.
There you go. Like it's happening in real time. I mean, I will always hold it against my dad that we did. The room I am in right now is my brother's room. And I will always hold it against him that the day oil was negative, I called him and said, like, how do we just get paid to hoard barrels of oil in this bedroom? Like, I think there was at least 1, 2, 3, 4, 5, 6, 7, 8, we could fit at least 7 barrels of oil here. Just what but how do you prepare?
I mean, what a barrel is like? How much is a barrel of oil these days? It's like $150 a barrel. I don't know.
It's actually, I believe, if I'm not mistaken,
I guess that's
yesterday
crude.
was crude oil came in at less than $100 a barrel.
Okay.
I've been avoiding your question because the truth is, like, it sucks to say it, but in this moment in time for a small sliver, cash is king. I'm not stopping my DCAing. I'm not stopping stacking, but cash is king for the short and immediate term. Ansel, welcome back.
Hey guys, sorry about that. Internet's spotty, I guess.
So Ansel, you were talking about how supply chain destruction brings down, or sorry, not supply chain destruction, but a recession brings down demand across the board, and then that has almost like an antithetical effect to the tightening up that's happened because of supply chain destruction and the loss of efficiency there.
Right. Yeah. Recessions just cause a pullback in demand. We saw this kind of, remember a couple months ago, everyone was saying, oh, we're going to have to ration diesel on the East Coast. You haven't heard anything about that for the last 2 months, because guess what? Markets work. If prices go up, that craters demand. Price goes up, demand goes down, and we have a return to normal. So that is just,
well, the funny thing is, like, I feel like today people don't, like, there's a lot of people are maybe even the main zeitgeist around like how the world works is like the base assumption that markets don't work that well.
Yeah. Right. Market failure. There's no such thing as a market failure. That's what central planners want you to do. They or want you to believe that the market can't take care of itself. It's not a self-balancing system. They need to balance it for you. Right. But the market is self-balancing, even with their interventions. I mean, their interventions will cause problems. It'll cause maybe things to get dislocated more than they otherwise would. But eventually the markets will correct for the government intervention too. It might take a little bit longer. So I don't know why free market people lost sight of that, but I mean, that's common sense for economics, in my opinion.
No, I mean, it makes sense to me as well, but we do not have to dwell on this. We have a lot of other topics we need to jam on. So Ansel, what is next?
Well, can I continue going on the charts? I'll just go through these fast because I think they're pretty important, especially
do it.
when we're talking about Europe here coming soon. And that is slide 17 is the European natural gas futures. The blue line is the front month contract, and the red line is July 2023. So a 1 year forward from today's date. As you can see, obviously the front month is more volatile, but I think where people are kind of shitting their pants right now in Europe is that red line. It has just taken off very recently, and that is saying that the market is expecting energy costs to be extremely high in Europe for over a year. So that's a worrisome from a business perspective. It's worrisome from an investment perspective, even a government perspective, a people perspective. That's very worrisome. And I think this recent kind of vertical line in the red chart is really worrisome for people. That's my last energy chart. Any comments on that one, Christian?
Man, energy going up means everything goes up in terms of price, in terms of burden, in terms of difficulty to make. So it's like a tax on Europe. I mean, we saw that in Europe, they redefined their energy mix to include nuclear, as well as, I don't know exactly how wide spanning the redefinition of oil or carbon-based fuels, fossil fuels. It gets redefined as green in their new definitions, but they're scrambling to maintain the narrative while putting themselves in a more sustainable position. But right now, Europe is not looking good. They went deep on this, ESG driven path, and they're effectively getting crushed by the first lick back. They have no answers to reality kind of instilling consequences on their actions.
Yeah, and if you look at the U.S. natural gas futures, the Henry Hub futures, which I don't have a chart of, unfortunately, is it's coming back down. I mean, it's not even near historic highs for U.S. natural gas futures. So, Europe is going to have different inflationary pressures, quote unquote inflationary pressures, than the U.S. is going to have. And that's very important when you are trying to predict what's going to be coming for the euro. But let's get into real quick. I just have a couple more on the supply chain. So number 18 here is the Baltic Dry Index. And this is just a weekly chart. It's showing, it topped way back towards the end of 2021 and has been down ever since. Even the Russia invasion stuff didn't really affect these bulk dry goods. So that's steel, grains, anything that doesn't ship in a 40-foot container would be kind of included with this Baltic Dry Index, and things are down. If you zoom this chart out, by the way, the Great Financial Crisis is like double this peak. So, I mean, it's not even close to how bad it was back then. And then my last shipping slide here is the next one. And this is the Freightos Index, which we've talked about here on the show before. And this is just showing that even last week, once again, we had an acceleration in the decline of shipping costs or 40-foot container prices from China to the US. So, supply chains are righting themselves because demand is crashing. So prices will come back in line with the norm. And that's all I have for this section, Christian.
I got nothing to add. Should we just continue?
All right. So let's, what about Credit Suisse? This was kind of something that Dylan LeClaire brought to my attention on Twitter, and he was going to be writing a blog post or a newsletter post for the Bitcoin Magazine Pro. I don't know if that has come out yet, but this was very interesting chart from Dylan showing the credit default swaps for Credit Suisse, big bank over there in Europe. And this is their default risk. So as this goes up, it means that there's more risk of the bank defaulting on their loans. Credit Suisse has been embroiled with scandal over the last couple years. Last year, they had this Archegos thing. I don't remember the specifics of that, but it was a pretty big deal, multi tens of billions of dollars in some scandal. Then they posted a loss in 2021 of 2.2 billion. Just earlier this year, they were embroiled in a $90 billion scandal of, funding drug dealers and sex child trafficking rings and things like that. So there's a very big ethics scandal from Credit Suisse earlier this year. They also had 1.7 billion exposure to Russia, which was, I think, the biggest in Europe. So their credit default swaps are blowing up. But I thought it was interesting because then someone replied to this. And if you go to the next slide, all the banks, their credit default swaps are rising. So this shows that there is definitely some stress in the global financial system. If you want to say we're not entering recession, like Powell is trying to say up there in front of Congress, that recession is not his base case. I mean, just look at any of the charts that we just produced right here, and demand is falling, stress in the system is increasing, and recession is definitely here. So that's what I have here, Christian. What you got?
And you think even depression is here, not just recession? This is one of multiple recessions back to back to back.
Yeah, well, like I was saying, return to normal. I think normal right now is just a depression, low growth, low inflation. Now, people might say, hey, well, that's not good for Bitcoin. How does Bitcoin succeed in that environment, right? But Bitcoin has succeeded in the environment since the great financial crisis just fine. And so Bitcoin's kind of, the way Bitcoin works is that it works in deflation and inflation, just like all sound money does. And as low growth and low inflation wrecks the world, then Bitcoin offers green shoots. Bitcoin offers a different way. It offers a way for people to get control back from maybe the globalists or the people that they don't want in charge anymore of the global economy. They can take that power back with Bitcoin. So that would be my answer to people that don't think Bitcoin will do well in a depression. I think, why not? Of course it will.
Speaking of Bitcoin and speaking of Europe, or I guess we're going to be talking about Europe in a second, the BIS, in a interesting move, creates room for banks to hold Bitcoin on their balance sheet. Ansel, do you want to go into the details on this news?
Yeah, this will be real quick. It's kind of, the bottom line here is that they made it so that you could hold up to 1% Bitcoin on a bank's balance sheet. Pretty simple news, but a lot of people took this as super positive, and a few people took it as maybe not so positive. So I think there's kind of a positive or negative way to take this. So yes, the BIS has now said that Bitcoin has a place on banks' balance sheets, and that is huge news. But it also said that you can't have more than 1% because it's too damn risky. So that is kind of a positive and a negative to this story. And I just wanted to put my 2 cents on that. Did you see this headline, and what was your reaction?
I did see the headline. I thought it was interesting, and I honestly think that central bankers, governments right now, they're kind of in this position, this weird quagmire that a lot of corporations found themselves in 2016, 2017, 2018, where they're saying Bitcoin is not the signal, it's blockchain. Now they're saying Bitcoin is not the signal, it's CBDCs, but they're also inherently almost saying that there is something here, right? It's difficult to say that, hey, this thing that was created by Bitcoin blockchain, it is not the signal, and also say that, hey, this thing that was created by Bitcoin digital currency is not the signal, but look at my version of that. I have a better one. So I think that they're in this quagmire, and it's pushing them closer and closer into like looking into Bitcoin itself and seeing that even as they oppose it outwardly, there are still benefits for them also getting into the adoption game too. So it's really interesting. We saw it happen with corporations. They're saying no, Bitcoin's not it, it's blockchain, and now corporations have Bitcoin treasury strategies and conferences about that, and it's a meme that's growing. And I think that that's going to be the same with commercial banks, state-run banks, even central banks very soon.
Absolutely. I don't have much to add to that other than, the government they've been looking for a reason to ban Bitcoin for a long time, and you couldn't do it because if you ban Bitcoin, you kind of acknowledge that it's a threat, right? So you actually give it a vote of confidence if you ban it. But now these DeFi folks, these NFT folks, and all these Ponzi scheme promoters out there, they have given the governments a reason to clamp down, and so maybe they'll use it. But there are bright signs out there on the horizon as well, like this the Biden executive order to request comment on Bitcoin and CBDCs and things. Bitcoin Policy Institute put in some comments, and it
Our
was
boys
awesome.
at the Bitcoin
It was
Policy
awesome.
Institute. Great
Yeah.
squad there.
Yeah, that's Matthew Pines over there, right?
Matthew Pines is one of the fellows. It's actually David Zell and Grant. Grant McCarty. They're both Nashville based. Hang out with them. Actually saw David Zell earlier today, and they've been absolutely crushing it. And yeah, they're a group of fellows. I think they have 10 plus fellows, including Matthew Pines. Absolutely fantastic, and they're doing what no other policy group has been able to muster up thus far. They've all, confused Bitcoin with other things, and finally someone is doing a good job. So cheers to them. Cheers to them.
Absolutely. And it's just, we need voices like that in this discussion when they try to demonize Bitcoin or lump Bitcoin in with these things, as the regulators will come. We need those voices. That's all
Ansel,
I had on
can
the
you talk about what you
BIS.
liked about that? I think we should talk about the report they did. Can you talk about what you liked about that report and, how it's different, a breath of fresh air, if you will?
Yeah, let me bring up some commentaries that I wrote for my I wrote this for my community over there. I have that new Telegram channel, so I wrote this out. Yeah, I think that the executive order will create a huge learning opportunity for many people. Most people were negative on it at first, right? They didn't like that this seemed like regulation or that the regulation was coming. But it probably will turn out positively if we have people like the Bitcoin Policy Institute writing these things. In there, they talked about the benefits of mining, how they think it's actually going to help renewables. They talked about pretty much all the arguments that we've made over the years about Bitcoin. It's but in a professional way. This is a very detailed argument that they laid out, just like Matthew Pines when we interviewed him about his national Bitcoin and strategic interests of the U.S. That article that he wrote there, it was pretty much all the arguments that we've made in Bitcoin over the last 8-10 years, but presented in a very professional manner. And that is exactly what the Bitcoin Policy Institute did here in response to the executive order.
No, yeah. I mean, again, huge fans and big shout out to them. I think more is coming from them. So keep an eye out. Make sure to go follow them on Twitter and go check out btcpolicy.org. Check out that report and all the other reports they put out there. Really putting a great step and a great foot forward for Bitcoin in terms of answering policymakers' questions and hopefully helping minimize the friction that comes from policymakers. I know we are rubbing up against time and we have a little bit more to talk about, especially regarding Europe.
Yeah, we can cover the recent protests if you want to. The stuff going on in Netherlands with the farmer protests looks to be spreading now to Poland and Italy. I mean, it's absolutely shutting down the Dutch economy. Almost like 100% of the economy is being shut down. It's pretty incredible to see. And this could lead to more fragmentation pressures in Europe, which I did talk about on the last episode of Fedwatch. So that's all I have for this. I didn't have any specifics. Do you want to give this one some color?
Yeah, I mean, it's difficult to get a good understanding of what's happening on the ground. One, there's a lot of bad information. Two, there's a lot of exaggerating what's actually happening. And then three, it's just not being covered by many. There's very light coverage, similar to what we've been seeing or what we saw with Canada, except that the people on the ground are making a whole lot more noise then. But generally speaking, I'm dealing with a lot of Dutch people because we're putting on Bitcoin Amsterdam, and it seems like people are actually pretty divided about this in the Netherlands, and it does seem like some of the images of an empty grocery store are a little bit overblown. But with that being said, like as time passes, this will continue to have a greater effect. In Canada, when they started blockading and things like that, it had a huge effect, and the effect was so big that Trudeau had to respond with force. So it's going to be very interesting to see things playing out. And we're seeing other European nations where farmers and other productive producers are getting hit with, very onerous regulations, starting to stand up and do the same thing as well. So it's very interesting to see, people who have heavy equipment using them to protest, and how there is power and scale in doing that in a nonviolent way, and seeing that movement kind of spread, especially again in Europe, a place that we've been calling out as a powder keg for a while.
Yeah, and I also heard that Canada, they're trying to do the same sort of agriculture regulations over in Canada, and that could spark another Canadian Freedom Day, or whatever they called it, Freedom Convoy. That would be interesting if it came back to Canada and spread around Europe. That'd be pretty crazy.
Wow, it is crazy just seeing all of this play out. Again, it's scary, it's exciting. I hope that the fallout kind of brings us back to a better path for the world. But it's scary to try to make it through that.
Yeah, I do have one more here comment that I did write in the outline that I forgot I put in here, is that some people say that the government instability affects risks, and that will affect the economy, going forward. That the let's see, government instability. So it is the central planners, the instability of the central planners, and the central planners not being on the same page and not showing enough unity and enough forthrightness to get the job done at the government level is what actually brings risk to the markets. And that's, I think, shown over there in Europe right now. But in fact, it's the other way around, that the economies crashing bring the instability to the political sphere. So like I was trying to tie this into what you were asked earlier about, I don't know, I was saying something earlier, now I can't remember what it was. About central planning and about the balancing of the markets, and how there is no market failure here. Well, these people, the globalists over there in Europe that are doing these the agricultural policies and stuff, they are thinking that it's a failure of government that's causing a recession, when really it's the recession that's causing the failure in government. So they always have it flipped around, and they put the central planner at the center, instead of the central planner is always, a result. The failure of central planning is always the result of the economy. So I don't know if I tied those things together or not.
Wow. That's profound, Ansel. You're effectively saying that, from an economic perspective, the majority of economists are in the equivalent of the flat earth paradigm, where, the central planner, the central bank is at the center of it. Even like the legend and lore and the myth of the Fed is in that paradigm. But the reality is that there's actually a sun, quote unquote, the free market, and we're all orbiting around it. And maybe that's the more true paradigm. I don't know if that makes sense to the listeners, or if I went off the deep end on that one. But Ansel, I know we have some questions that you solicited, Q&A on Twitter. We can jump into that, and then maybe we can riff on Bitcoin price. I mean, obviously we went over a chart earlier, but price is in a dubious position still here at 20K. Who knows if we can go up? There's a lot of negatives that come with long consolidation, as well as potential positives with the price.
Yeah. So do you have the Twitter questions pulled up? You want to fire away?
Yeah, let's do it. So you picked out about 5 questions from Twitter, so I'm just going to hit on them. Question number 1 is from Nick Coletta, can you explain the importance of the 10 and 2 in pleb terms?
Okay, so the 10 and 2, he's talking about the yield curve, and you probably hear that from a lot of macro people. That is just the interest rate on the 2-year treasury versus the interest rate on the 10-year treasury. And when the 2-year treasury goes above the 10-year treasury, it doesn't make sense, right? Why would it cost more to borrow money for a shorter period of time than a longer period of time? And so it tells you when that thing happens, when the 2 goes above the 10, that tells you that something is wrong. The market is telling you something is wrong. And that's generally always been in front of a recession. I think it's something like 6 to 18 months from the time of the inversion like that we have recession. So that's just the importance of the yield curve. It tells you that the market participants and the treasury market is the largest, most sophisticated market in the world. It's telling you that something's wrong. So that's the importance of the yield curve.
All right. Next question. What is the Fed's role in a post-Bitcoin adoption America?
Okay. It will be similar to the role of the Fed on the gold standard. I mean, they don't really have a role today, like we say on the show, that they are followers. Their main job is influence. They're influencing the market through the Fed mythology, and that they print money and all this stuff, but they inevitably follow what the market is doing. So what will their influence be after Bitcoin adoption? The actual influence will be the same, which is very little, but their role will probably look a lot like the gold standard. If eventually maybe the Fed will go away, which would be great, but at the beginning, it'll probably just look a lot like the gold standard. They'll be less important in our daily lives and in the financial press.
Ansel, this is not from Twitter. This is actually a live question from YouTube.
Okay.
Is Jimmy Song joining Fedwatch someday? I don't know. Do you want to invite Jimmy Song on?
We should. I've talked to him in the past back on World Crypto Network days. So, yeah, that would be great to have him on. Yeah, for sure.
All right. Well, Ansel, I'll leave it up to you to put out an invite to Jimmy Song. Jimmy's on Bitcoin Magazine Live a lot. I think he came on almost every Friday for several weeks in a row. So we got lots of Jimmy Song here at Bitcoin Magazine. Let's get back to the Twitter questions. I know we have a couple more here, and then we can hit on some riffing on Bitcoin price before we close it out. Okay, some hopium. Give the folks some hopium around why it is the way that oh my gosh, I am totally blowing this. But let's talk about the WF. Let's talk about globalists. Give the people some hopium why they will fail.
Yeah, well, I see the globalists failing all over the place. I'm not as maybe aggressive in my rhetoric as Tom Luongo, the great Tom Luongo, but I see things very similarly, that the globalists are, every step they take forward, they get one step back. I also see, every step forward they take 2 steps back. And I also see that they are acting very defensively recently. So a lot of their policies, a lot of their things like this fragmentation, and Christine Lagarde talking about, oh, we're going to make a new monetary policy tool that is going to solve everybody's worries about the euro. It's defense. They're playing defense instead of offense. And so I see that happening a lot with globalists. And yeah, I think that they will just inevitably lose out to the rise of populism.
All right. So what do you mean by deflationary environment? What is like the monetary perspective around this? Can you expand a little bit about describing what you mean about a deflationary environment?
Okay. So deflationary environment, that you can't escape the end of a credit cycle. The end of a credit cycle is deflation. That credit disappears. It gets defaulted on, and money supply shrinks. Even Mises said you can't escape the end of a credit cycle, right? And so that is what we have here. We just have one big global credit cycle that's lasted, in my opinion, Ray Dalio says for the last 80 years, and I think it's about that, maybe 60 years or something in that neighborhood, where the this global credit bubble has been building, and now we're deflating this global credit bubble. They can kick the can down the road, right? They can do QE, which is just balance sheet manipulation. It's not really printing money. It's just manipulating the bank's balance sheets, hoping that they will print money in the process of making loans. But you can't get rid of this debt problem. You can't get out of a debt problem by adding more debt. So the end of this is deflationary, and that is the pressure. The pressure is in the deflationary direction. That's why all these crises are not like hyperinflationary crises, at least in the United States in the dollar. All the crises are flash crashes, where the credit markets freeze and there's a possibility that everything crashes to zero. That's a deflationary environment that we're in, and they try to kick the can down the road, but they will never be able to escape the ultimate end, which is not inflation, is deflation.
Bum, bum, bum. All right. We have 3 more minutes here. Is the strong dollar transitory? How does copper play a role in macro? What are the power dynamics in international trade now that China is opening up its ports and flooding the world with inventory? Is any of this deflationary? Ansel, a lot of questions here.
Yeah.
You got
we
2
covered
minutes.
some of those.
Go.
We
did cover some of this.
Yeah, we covered some of those with the copper. And the dollar, I think the dollar will continue to strengthen, but it won't be a straight line, obviously. I think we'll see a stair step upwards, kind of what we've seen since the great financial crisis. That what's been happening in the first 10 years after the great financial crisis is what we're going to return back to. Now, as far as China goes and reopening their ports, a lot of that traffic actually did get rerouted to other ports in China away from Shanghai when they had their whole lockdowns. So the backup is not as bad as what we at first thought. The U.S. customer or the U.S. purchasing manager or whatever you want to call them, they're just making fewer orders from China right now too. So even if they do, completely open up over there in China, it won't be a flood of new orders to the U.S. So overall, I think it is a symptom of deflation and not necessarily a cause.
All right, Ansel, we're at time. Let's just have one last word about Bitcoin price.
Yeah.
Things are ripping right now. I think we just passed 21,000, but
oh, nice.
I'll see. It seems like miners are selling the rip, if you will, and if that trend continues, I think that the bear market continues. But as soon as sentiment changes and people are not willing to sell the rip, and actually the rip causes FOMO, then I think we can reevaluate. But with that, you can follow me at CK_Snarks on Twitter. This is Fedwatch. We drop episodes at least once a week. If not, Ansel will drop in a couple more. Check us out on Fedwatch on your favorite podcast player. Visit us on YouTube. We're also there, and on Rumble. Ansel, where can people find more about you?
On Twitter, bitcoinandmarkets.com is my website. I have a Discord community and a Telegram channel, doing my own podcast over there as well still. So lots of stuff going on. Oh, and a free Friday newsletter. So sign up on bitcoinandmarkets.com.
Ansel is my favorite. So that's why we do this podcast. I've been listening to his stuff forever, and now I'm honored to be his co-host for Fedwatch. Q, thank you for having us. What's next?
Thank you for joining us, guys. We'll be having Jimmy Song join us in just a moment. But if you can't get over CK's voice and want to hear more of it, hop on over to Twitter at about 2 p.m. Pacific time, 5 p.m. Eastern. And any and all of your questions about Bitcoin Amsterdam will be answered there. And as a gentle, subtle reminder, go buy your tickets to Bitcoin Amsterdam. So you know the drill. Myself, Chris, can't have our jobs if you don't buy the ticket to Bitcoin Amsterdam. That's kind of how this whole shtick works. So buy those tickets. And then we'll be joined by Jimmy Song in just a moment.
Bang, bang.
What is up, guys? Thank you for sticking through those commercial breaks. Gentle reminder yet again, if you don't have your ticket to Bitcoin Amsterdam, go buy your damn ticket. And if you are not yet subscribed to the print mag, you're just doing this whole thing wrong. Pop on over to the Bitcoin Magazine store, use promo code BMLive, get 10% off of your annual subscription, your or a copy of the most recent censorship-resistant print mag. And now I'm very excited to introduce our guest now, Jimmy Song. Jimmy, welcome back to the show.
Thanks for having me again. And as usual, it's a lot of fun to come on this thing and, say what I need to say. Of course, like we've had a lot of different things happen. So, I'm sure we'll be exploring a lot of different aspects of what's been going on. So looking forward to talking about all that.
What are you talking about, Jimmy? I've been under a rock for the last couple of weeks. Like, there's no news. No news. You
None
missed,
whatsoever.
you missed earlier when I was pushing for, like, what are the 4 horsemen of the pure market bottom? And I'm going to share with you what I think they are, and I'd love your thoughts and maybe what your other ones are. But first thing first, Celsius, you need to die. Literally, it needs to die. Next, I need Gary V to come out and finally admit to the world that his whole shtick of, yo, dude, just like quit your job, bro, and like you can do whatever you want, man. It's all a fucking shtick because he's a fucking trust fund baby and can use daddy's funds to prop up his lifestyle. And then, by the way, he sold you all these bullshit NFTs that are literally useless, worthless, and a scam. Then we have ETH 2.0 actually getting rolled out will be a sign of a market bottom. And then the final one, of course, is Peter Schiff buying some Bitcoin.
I'm going to say that's probably not. Well, Celsius will probably die.
Thank
but
you.
The other stuff, I
It's
don't
all-
know. I don't know
They're
about
terrible
the other
fucking
stuff.
horsemen. They're just arbitrary. What are your? I mean, the question itself is
What are your horsemen for the market bottom?
Well, you usually have a rage quit, and I think we're pretty close. I think Nick Carter has pretty much rage quit. Although he's not denouncing Bitcoin or anything like that, but that's only a matter of time, right? Like, we had Roger Ver in the last cycle, and we had Mike Hearn in the cycle before that, and so on. So it's usually some sort of rage quit. That's not a terrible indicator. But yeah, a lot of people get stressed around that stuff. A lot of VCs, I think, are struggling a little bit because they held their altcoins down 80-90%. I'm sure a lot of their LPs are asking, why didn't you sell? And you get stuff like that. But yeah, generally, like for me, the way you tell a bear market bottom is when a lot of people have lost hope and only the real true believers are left. There's still, I think, a lot of hopium out there, especially among altcoiners. So I don't know. It doesn't feel like bottom yet.
One thing that, as I continue to just read and absorb from people way smarter than me, one thing that I see get pointed out a lot is, previous market downturns in Bitcoin in particular have never had the backdrop of a global economic recession. And I want to get your thoughts on, is that going to play a significant impact in price first and then the network itself at large?
Yeah, I mean, well, I don't know, right? We've never been through this before. I mean, Bitcoin was created after the last giant recession crisis kind of thing. And we're coming upon another one. The thing, though, is that I don't know if the Fed has the balls to like keep a tight monetary policy. I mean, I think a tight monetary policy in general is a good thing because that means whatever people save in the dollar actually like holds its value. But that is politically very, very difficult to do. You need to have balls of steel, right? Volcker, right? Balls of steel. Just like let the interest rates just keep rising. and bankrupted probably a ton of companies. I'm sure that's what would happen if rates went up. But there's a whole ton of commercial paper out there that's not going to be able to compete. And bond prices will go down so that the yields are higher. Stock prices will come down because people are going to use it for other stuff, like holding it in the dollar or whatever. So you get some very weird effects, but yeah. So all that is to say, I don't think this is going to happen. Like where, like this economic downturn is going to be allowed to continue as long as the Fed can do something. Once you get mass unemployment or anything like that, they're going to have to act. And are we there yet? Probably not. But bond markets are pricing in an interest rate cut, not a rise. So they know something we don't. And markets are generally very good about sort of like information leaks and stuff like that. So I don't know. I'm not prepared to say that the economic downturn is like at hand or anything like that. It's mostly just sort of created by Fed policy, which is a common thing whenever you have a central controller of the currency. They can manipulate things. And fun historical fact, this is what the second central bank of the United States did during the Jackson presidency. They purposefully tightened money so that the country would go into a recession. And Andrew Jackson basically called them out on it, and he got reelected. And they did that so that somebody more favorable to the bank would be elected. But Jackson hated them and basically defunded them, and they went away. Probably one of the bravest things that any president has done, to be honest. But yeah, this I don't know if the Fed has the balls to do it, basically.
Sorry, was muted. Yeah, I mean, I think there's this disconnect with what is necessary to happen to fix the issues with our money and our system versus what the people who have the power to make those decisions have the appetite to do. Time will tell. If any of us here had that crystal ball to perfectly map out what is going to happen, we wouldn't be here. We'd have our own island, and I would have bet very big money on, I don't know, the Rams winning the Super Bowl, and probably have played the GameStop debacle way better than I did. Jimmy, what's been, grinding your gears over the last week since we last got to talk? There's been a lot going on in the world and a lot of things to piss you off, I'm sure.
Well, more than piss me off, it's just kind of I'm saddened by what's happened to Nick Carter. I mean, we both know that he's contributed some pretty good articles to Bitcoin, but seeing him just sort of fly off the handle like he has in the last week and a half has been sad more than anything else. It's just you're watching, that scene from what's that movie? Oh gosh, where the guy keeps calling this woman that he just met. I can't remember what movie that is, but he calls her, leaves a voice message, hangs up, and then he calls her again and like leaves another long message, and he calls her again. Like
American Psycho.
It wasn't American Psycho. It was oh gosh. But he's like trying to get over this previous relationship, and he gets a girl's number and he leaves like 4 super long messages, and then he's like he calls a 5th time and she's just like, don't ever call me again, right? Like you're crazy. But the whole time when you're watching that scene, it's just you get it feels cringier and cringier and cringier, right? Like, and you like the entire audience is just like, no, don't do it. And he explains himself more and more. That's what this feels like. It just gets, just when you think it can't get cringier, it gets even cringier. And I mean, he's going on an Ethereum podcast, and I mean, my star is continue. I mean, stuff like that. It's painful for me to watch because I like Nick. He's a good guy, but I mean, it's just kind of flown off the handle, and it's a very sort of sad situation. And I wish it didn't have to come to this, but I've said this multiple times in different eras, right? Like last bull market, I mean, said goodbye to a lot of B cashers, right? Some of them were, good Bitcoiners at some point. The the cycle before that, there were a ton of people. I mean, Bitcoin was really the only coin at that point, but then they left for Ethereum or whatever, and it was just like, well, I mean, these things just sort of happen. People leave, people come back, and you just sort of have to deal with it. But it's nevertheless still a bit sad.
Yeah, the interview he did where he somebody asked him like, "Hey, is this the end of Bitcoin maximalism?" And he's like, "I'm not gonna say that I killed it, but this has got to be a major blow." I was like, "Oh God, Nick, why? Like, you were supposed to be the chosen one,
Yeah, it's one of those like huge facepalm moments, right? It's just you could see him almost like almost determined to destroy himself. Like like, is there anything that the internet punishes more harshly than anything that sounds that arrogant, right? Like he could be perfectly right, but you will get punished for that level of sort of like perceived ego or pride, and he's getting punished. And it's just like I don't know who's advising him, or if he has anyone in his life just telling him like, dude, like just calm down, stop doing what you're doing, because you are hurting yourself way more by doing this additional action. And that's the real sad part to me. Like, does he have no one in his life that can actually speak truth to him and say, dude, you're looking like a complete prick here? Like, and I know he's not a prick like that, but like that's what he comes off as when he says stuff like that, which to me is the real sad part, because he's not a bad guy. He's just, I don't know, triggered on tilt, whatever you want to say. It's just very cringy to watch, and I'm kind of sad about it. I don't know. P, you're muted.
One day I'll get it right. Today is not that day. One thing that I think is interesting here is that this is the type of behavior you normally see in the bull market. Like normally it's like, the temptation gets too great and somebody who's like like presents themselves as a stalwart, whatever, a Bitcoin maximalist kind of starts shifting over and publicly, embracing shitcoins. I'm surprised that this is during the bear market, but anyway.
Yeah, I honestly, it happens whenever, and I'm sure he's under a lot of stress. Like every VC is, given just sort of like how the market has been, and like all these valuations are like tumbling, and a lot of these companies aren't doing that great. So I get it. It's stressful, and there's a lot of things that you sort of have to manage as a VC, mostly from LPs yelling at you and saying, what the hell? Like, what are you doing with my money? I'm losing it or whatever. So I get it. But, like during bull markets, if you do sort of like do a heel turn, like say Udi did, um, there's like a very clear financial incentive involved. He wasn't getting paid in the Bitcoin space. He was getting paid in altcoins, because they were like, hey, can you review this and we'll give you these tokens and all this other stuff. So he naturally went that way because that's where he was getting paid. I don't think that was necessarily the case with Nick. It seems that for him it was, he couldn't stand being made fun of or something, and he doesn't know how to take an L, which honestly, you gotta kind of learn that. I would hope, if you're a functioning adult, like, you're not gonna win everything. That's just unrealistic. You learn to take the L, figure out how to move on from it. And like, the whole thing would have stopped after like one day if he just said, I'm sorry that this investment that I made is upsetting some people. But like, here's what I'm doing, why I think it's still compatible with my beliefs or whatever. And like, I don't know if anyone would have really like dug into him quite as much as he's been dug into in the past week, if he just sort of like apologized and finished it, or even like 5 days ago, if he apologized and said something, I think that would have been the end of it. But instead, he's just sort of egged it on. He's like, "Oh, like, you think I'm doing something immoral? Then, I'm going to come after you and make fun of you, and you know, uh, do all this other stuff." Which is, I mean, like, honestly, like, he needs somebody in his life that's there to tell him, "Hey, like, you're doing something really dumb. Do you really want to go down this road?" And he clearly doesn't have one, or he's not listening to the people that are telling him that. I don't know what it is, but it's I don't know. Maybe it's a good lesson for anyone in this space, like, especially if you're a public figure. Like, take the L and move on, right? Like, you're only going to make it worse by trying to make it out to be that you're the one that's brilliant and right all the time. Like, the internet does not forgive that in any way, shape, or form, and you're going to get destroyed. And that's and Nick has probably the exact wrong personality to handle that. As far as I can tell, he's fairly sensitive, and yeah, I like, in many ways that's a good thing, because it allows him to sort of like ferret out the right arguments as he's writing his articles and things like that. And he's clearly very smart, but oh man, like, you need character to go with that. And honestly, like, the actions that he's taken, it's just really painful to watch, because he just seems so unaware of how he comes off or what he's doing.
Is there a path to redemption for not just Nick, but any of these people who were once an integral part of Bitcoin and its community to return to the community?
Yeah, I think so. I mean, there have been many people that have like sort of gone out and come back. It's the key thing though is you need to apologize, and it needs to be sincere. You can't just be like, "I'm sorry," blah blah blah. I think Wences, he signed the 2x agreement. He promoted Bitcoin 2x and everything else. A couple of years later, he said, "I was wrong, and I apologize to the community for doing that." It was fine. Like that, nobody was like, "Oh, you know what? You're still a spook, and we're gonna hate you." Blah blah blah. It wasn't like that at all. It was, okay, welcome back. Um, the thing that keeps most of these people away that have left, I think, it isn't necessarily that the um, the tech is so much better in something else or whatever. It's almost always pride. It's an unwillingness to admit that you were wrong at some point. And I think this is still what keeps people like Gavin Andreessen, and Mike Hearn and Jeff Garzik away. They have sort of like this conception of themselves, and they don't want to take the L. And Nick seems to be going down the same road. I think Udi's certainly the same way. But you come back and say, I was wrong. I like, this is the right way, to think about Bitcoin. And I don't think there are going to be people on Twitter saying, "Oh, you're still sucky." I mean, maybe a few people or whatever, but they're not going to be the ones that matter. I mean, if you're showing genuine contrition at what you did, I really don't think there are any people that would be like, "Screw you, go away." That's just not how this community is. That's sort of like caricatured that way by altcoiners. But that's, I mean, just look at how people are. I really don't think that's the case.
So one thing I wanted to get your thoughts on is the recent news from Mt. Gox. They announced that they are starting to release, I think it's 150,000 Bitcoin that have been locked up since they blew up. What are your thoughts on the significance of that? What that means for the space, if anything at all?
Yeah, amazing. 8 years later, huh? Like, should tell you a little bit about like how slow the legal system moves, and um, like the people that had money in that exchange, like um, they're finally getting, I guess, somewhat made whole. Obviously, keeping that Bitcoin on your own wallet would have done way better. But 8 years of wilderness, now you finally get access to it. Great. I think what people are going to say is, oh, there's going to be a huge dump of coins or whatever. There might be. Who knows? But if you owned it back in 2013, it's a pretty good chance that you are happy about Bitcoin or see some value in Bitcoin and might want to keep it. It's not most of the big whales that were on there were trying to acquire it cheap. And from what I understand, the high time preference people, they sold their claims to third parties. So I know Fortress was going up and buying tons and tons of these claims. They're probably going to get a huge amount of Bitcoin out of it. But this was part of their strategy because they knew that acquiring Bitcoin in size was not going to be easy. So I think most of the people that will be getting it, especially the large holders, they wanted this Bitcoin. They're not looking to try to sell out of their position. It's a way for them to accumulate a lot of Bitcoin without sort of slippage or anything like that. So I think that's what's going to happen. I don't see a big crash or anything like that happening. Like 8 years is a long time. A lot of people just forgot about the claims or sold them or whatever. So that seems to me where things are going. Where
Q, you were going to ask something before I so rudely cut you off.
Yeah, you totally killed my rabbit hole. I want to talk about politics and Bitcoin because, we're leading up to an election, and I want to start first abroad. Central African Republic. This became the number 2 country to ever adopt Bitcoin as legal tender, and now they're coming out with their own spin-off of like a CAR token or whatever the actual details are. I refuse to actually acknowledge or give it even an extra additional view. This is no different than, in my opinion, when the mayor of Miami was, we're a Bitcoin city. And then within weeks of the Bitcoin conference in 2021, they released Miami Coin. Or no different than Eric Adams saying, I'll take my first paycheck in Bitcoin. A week later, actually, I'm going to take it in Bitcoin and Ethereum. Fast forward 6 months, and New York State is passing through or trying to pass through legislation to curb and restrict Bitcoin mining. I want to talk about just politicians in general and what their role within Bitcoin is going to be in the short and medium term. In the long term, I think all politicians die, but that's conversation for some weed.
I mean, they're high time preference people. What can I say? They look towards what can I get now? How is it going to help me in my next election? And how am I going to get sort of money out of it? That's kind of the type of people politics attracts. So when, the mayor of Miami gets pitched on, oh, Miami coin, it'll, give your city lots of money. Yeah, they're like, okay, we'll take it, right? Like that's how they think. They're not trained to think very long term, and it's an unfortunate result of sort of the system that we have, where you're in office for 4 years, and you better make the most of it. It's that's kind of how it is, right? Like where you take advantage of your office. The Central African Republic, you had some smooth talkers come in and say, we can make you lots of money if you do this, and it'll be really good for your country, blah blah blah. And they're not thinking about the long term. And I gotta tell you, like, even in El Salvador, you had a lot of altcoiners try to come in and try to get influence, with the right authorities, so that they can get their altcoin sort of like carved out. And they failed, largely because there's a lot of Bitcoiners there that know what the heck they're talking about. The people in power there are a lot more low time preference, I think, and they realize, like, this is, we can't screw this up. We can't just like mess around with altcoins or try something like that and come out behind and get egg on our face. They're all in on Bitcoin because that's what they know, this is what's putting them on the map. But yeah, a lot of politicians are just very high time preference, and if you're high time preference, altcoins are exactly where you're gonna like naturally lead yourself, because you're not thinking about 5-10 years down the line. Most altcoins 5-10 years down the line, you're down 99-100%. Like you're not going to do very well. But if you're thinking in terms of Bitcoin, it's going to do way better. So this is where the high time preference behavior of politicians is sort of like meeting currency with money. And unfortunately, most of them don't have that low time preference. Although, once you do get into Bitcoin, you do start thinking about this stuff on like longer time scales. How is this country going to be good like 20 years from now? Instead of, hey, can I make a quick buck right here? And that's the big difference. And unfortunately, most of these politicians have no idea how to evaluate anything. They trust, they don't verify, and that's how it works in politics, because most of the people that are in power have no expertise on these topics, and they just have to trust other people. And it's very easy to fool other politicians, because they don't have the skills to verify anything either. And that's actually what I wrote about in this past week. It's about fiat knowledge. They operate from that paradigm. Of course, you're going to get manipulated by the designated experts or the people in power that like sort of control a particular field of knowledge. And that's unfortunately how they operate. And it's something that I think Bitcoin changes to be much better.
Sorry, Jerry. The correct answer was term limits. That was the answer I was looking for. But you're not wrong. I wonder what effect, in your opinion, and none of us here are political experts, none of us are historians. We're just three dudes who really like Bitcoin, and these two over here know a hell of a lot more about that than I do. But what, like, I hear a lot of conversations around the limitations of both the fact that parties domestically in the US have a limited window to accomplish things, and you try to not piss off too many people to retain your power, while at the same time, these politicians have retained power for generations. So you have no incentive to actually get work done. It's almost as though the whole incentive structure within politics is don't piss off too many people, so you can retain your high-paying, cushy job to continue to just do as little as possible to piss off as few people as possible. I don't know if that's a fair, accurate assessment, or if the introduction of something like term limits for Congress in particular would change people's time horizons, would change their incentive structures. Just genuinely curious your thoughts on that.
Yeah, the real problem here is that we have this concept of public property, and this is something that I've spoken about with Robert Breedlove on his podcast. But basically, it's this: the idea of public property is sort of a weird oxymoron, because if you look at the Latin, propria is one's own. How can something be public and one's own, right? Like you can't own it's not owned by anybody. And it's sort of like a shared ownership or something weird like that. And you get very bad incentives when you combine public property with sort of elected officials who want to sort of like extract value from public property because they are in charge of it. They sort of get to rent it for a few years, and they get to extract whatever value they can for themselves or their relatives or their friends or something like that. And this is really the criticism that Hoppe has in his book, Democracy, the God That Failed. And I think the analysis is sound, because this is the sort of same behavior that we see all the time with people in democracies, is that the people that come into power have a very high time preference, like immediate sort of gratification kind of thing. And it's a structural problem because of the presence of public property. Now, if you don't have public property, the alternative is that every sort of like property is owned by somebody, right? So instead of having public parks or something like that, you have somebody that owns that park, and they do what they want to do with it. If it's charged for admission or whatever, that's totally fine. If they want to take some tax dollars to rent it out or whatever, and those work fine. What doesn't work fine and is you have public property, and they are the people in charge of it don't own it, and and they basically try to extract resources from it. So you have stuff like, I'm sure wherever you live, there's probably a highway construction project that's taken way longer than you thought, right? Like usually an interstate highway near you has been under construction for like the last 7 years or something. And those things never get finished. Why? Because the incentives are off. They're all looking at sort of like short-term incentives and are very high time preference, instead of how do we build this thing so that it lasts for 20, 30 years. Because the officials in charge, they're not looking at it that way, because it's not really theirs. It quote unquote belongs to the public. And that's the real structural thing. And the thing that Hoppe argues in Democracy, the God That Failed, is that if you have something like a monarchy, now this isn't to say monarchy is ideal or whatever, the king owns this property. It's not public property, it's the king's property, right? And you can see vestiges of it in places like Canada, where you have like Queen's Parkway or whatever. It's owned by the king. And if that's the case, the king takes care of it. And because it's owned, well, you want to do a good job with it, and you want to make sure that long term it lasts and everything else. Soon as somebody owns something, they have an incentive to improve it and make it better. And that's the real sort of like disconnect here, is that oftentimes you get property that isn't owned by anybody, and as a result, it falls into disrepair. For a while here in Austin, you had like homeless people, like sleeping in parks and tents, right? Like, and I like, however you feel, right, whether you're left or right or whatever, that is the exact wrong, like, sort of match between what these people need and what the land is for. The land is for recreation. If it's not for sheltering homeless people. If you want to shelter homeless people, build a homeless shelter, right? it's not what the actual public property and its use are out of alignment because it's quote unquote public property, and you get weird behavior like that. And like if it was if a homeless person tried to sleep in the backyard of your house, you would call the police, right? And kick them out. But because it's quote unquote public land, they are able to sort of like get by on a loophole. Same thing with like homeless encampments on all kinds of public property. Oftentimes they're like state parks or national parks or under a interstate highway or something like that. Like, if you want to shelter the homeless, go build a homeless shelter. But a highway is not where not a shelter for homeless people, right? Like it makes everything just completely off. And that's a problem with this weird oxymoron called public property, which should not exist. I think all property is way better the minute when it's owned by somebody, when they have an incentive to go and improve it. And it's a sad reality, unfortunately, and this is why public things tend to be of inferior quality to private things.
At a certain point, though, like you bring up an example of the homeless person showing up to my backyard and I call the police force, which in turn is a branch of the government.
Mm-hmm.
Where's that line? Where's that line that we need some sort of protection of our property? And do we need to be more self-reliant, or is there a necessity to have some sort of outside force as that form of protection for property, in your opinion?
Yeah, of course. And I mean, unless you happen to be really good at it, but private security forces are a thing, right? Like if you are a business in a big building, you hire security guards and stuff like that. It's not necessarily the police, but the thing that I would object to is sort of like a monopoly on something like that. If you're able to hire your own um, security forces for your property, that's generally going to be better. And we saw this a year and a half ago, right? Like with all the riots and everything else in these places, the police weren't doing anything. They just refused to show up, basically. But if you had a private security force that was defending your property, yeah, that worked much better. And the whole thing with Rittenhouse and everything like that, it was about somebody trying to defend his own property, right? And that sort of protection of your own stuff is something that you would do if you own the property. But if you're depending on government generosity to do it, I think it was clearly shown that that's not always reliable, and you're kind of you're at risk of losing everything that you have.
So more guns.
I'm just saying, let people own their own stuff and protect their own stuff, right? Like this is what we preach in Bitcoin: not your keys, not your coins. Don't trust other people with it. Hold your own stuff. Outsource whatever it is that you need. Ideally, in a self-sovereign world, you can defend yourself, but that's not always possible. And you can contract out some of that, and you pay them, and you have a contract instead of this weird thing where you have a public good that sort of like treats everyone, is supposed to treat everyone equally. We know that doesn't happen because policeman's going to be a lot more responsive to you in a nice suburb than in the ghetto or something like that. So it's stuff like that I think public property sort of like makes really bad. And I wrote an essay about this a while ago about why I'm a little bit wary about covenants, because it does sort of muddy the waters of the borders of property. And that's when you get in trouble. When you have something like public property, that's like who's in charge, who's allowed to do what, and it adds all this additional governance or confusion around who owns what, which I don't think is very good.
All right, I want to play a game with this because two of my favorite places to be are, one is deemed public property and one is deemed private property. The public property for me is the beach. Yes, there are private beaches. I don't think a single one of you plebs owns or is at a private beach. If you are, you're not a pleb. And then the private property for me is a ski resort, somewhere for me to go snowboarding, but in a controlled and contained environment, not the backcountry stuff that I do venture off and go to, which tends to actually be on public property. What does in your mind, where we have removed the idea of public property and the government necessitating property ownership, what does the beach look like? Because let me tell you, Jimmy, if you're taking the beaches away from me, we need to reevaluate some things here.
No, and there are sort of like beaches where you have to pay a fee to get in and stuff, right? Like the thing about beaches that's very frustrating is that almost always it's like nothing is where you want it to be when you need it, right? Like they're almost always like too few showers for you to like wash off sand, and it's always like far away from the parking lot where you parked, and gonna get all the sand in your car and stuff like that. Think about who designed that. It's some stupid government official that didn't think about the beachgoer experience. But if somebody actually owned the beach, well, they would be more motivated to make the beach experience way better, right? Like maybe have more bathrooms, right? Have more lifeguards maybe for safety. You can have better food, maybe even like food trucks like nearby and everything else. Rentals that aren't monopolized. The experience would be better with a private owner rather than a public beach, because it's frustrating because you never have everything that you want at the place that you want it. Instead, it's a public beach, so there are no stores around. Maybe you get somebody with some sandals like coming by and trying to sell you some or whatever. Like it would be way better if somebody actually owned it, because they would be more motivated to serve you, the customer, the person that's going to a beach. And like we tend to think of access to the beach as like a free public good. It's not free. You're paying for it, and taxes and inflation and all this other stuff. All those government officials, they're all getting paid. And if you're not a beachgoer, you're still paying for it, because it's taken out of your taxes. So in a way, it's socialized. The cost is completely socialized. And it makes for a worse experience rather than a better one. And if you have private owners, it becomes better. It like they're more motivated to do better things with it and make it a better experience. So I think beaches will be much better. And think about like how difficult it is to set up ski lifts and maintaining snow and snow machines and all this stuff. And the people that go to ski resorts, they really enjoy their time. Like when's the last time you went to a ski resort and said, I would really like to eat something right now, but there's just nothing here there's no restaurant.
I got a laundry list of ski resorts that need upgrades, man. Let me tell you, Jimmy.
Yeah, but they're probably cheaper, right? The really good ski resorts, I bet you have all of this stuff. And this is where the price dichotomy comes in, where you as a customer can go to a super fancy beach where, they have masseuses at the beach, so you can get a massage at the while you're suntanning or something. Or versus like a cheaper beach where maybe they don't have stuff like that, right? Like you have varying levels of service, and people pay the price that they want to pay, and this is how the market sort of like shows chooses various things, and you generally get better and better services and goods as a result. And like ski resorts like from 50 years ago, probably very, very different than now, right? Like because they have better machines that'll take you up there faster, um you know, more interesting stuff. Even snowboarding didn't exist 50 years ago, but they let you on, or they have new types of fun that you can have at these things. Um, a beach, a public beach 50 years later, I mean, like probably a lot of them don't even allow some of the water sports that are really fun and interesting that weren't available 50 years ago because it's some public bureaucrat that says you're not allowed to do it, right? Like private beaches, like you could have way more innovation. And more interestingness and things like that. And that's a good thing. This is how everything improves. Instead, you have sort of like the stagnation of sort of like beach stuff that honestly hasn't changed that much on public beaches probably for the last 50 years.
I agree to a certain point with you. I think, in all honesty, there is an underlying issue with everything in the world, and that is complacency. And complacency is the death of everything. While, yes, the ski experience has gotten better over 50 years, I'd actually argue and say the ski experience from 10 years ago was far superior than what you have today. And a lot of that is rooted around complacency. You had a lot of these businesses buying up smaller mom and pop shop type mountains. And in turn, now you have conglomerates running an industry, jacking up prices, and now you've left out an entire sort of class of people and below who just are priced out of this experience. So my concern is that by privatizing the beach going experience, while maybe the first iteration, the first decade iteration is great, at a certain point to maximize profits, you do raise prices. And my fear or concern is that all of a sudden you've now priced people out of just the simple experience of going outside. And that to me seems like a very slippery slope. My question is, how do we go from this present moment where something such as the beach is deemed public land, and how does that transition over to private ownership?
Yeah, and what you're pointing to is actually the result of fiat money. You can do leverage buyouts of other ski resorts because you have this huge bucket of money available through commercial banks where you can, they'll print money on your behalf so that you can go buy it, right? And you get a monopoly. You're able to raise prices because you're able to buy everything. If you're under a hard money, a sound money, then you have to go and get that from the actual market. The interest rates are going to be way higher. Or if you had to save, then you're going to have to save and make way more profit than your competitors, in order to buy them out. And that's typically way more difficult. So monopolies are naturally resisted by any sort of reasonable market under sound money. It's all this easy money that causes this sort of like consolidation and jacking up prices, as you say, that's been going on. It's because they were able to do leverage buyouts and things like that, which and they jack up the prices so they can pay back the loans, and then they make profit on that. So it's all a part of this fiat game that's being played. With something like a beach, you serve all segments of the market, and maybe you have lots of luxury resorts at the beginning, but if that's what people want to go to and that's what people will pay for, great. But you saturate that market fairly quick. There are people, you compete by making things cheaper and so on. at some point, I think people will be able to go to the beach for fairly cheap. And maybe it's like kind of like a free to play app on your iPhone or something like that, where you can go to the beach for free, but if you want all of these upgrades, like say, use of a convenient shower or something like that, then maybe it costs you 50 cents or something. And they're maybe upsell you on a whole bunch of other stuff like food or lodging or surfboard rental or boat rental, whatever. There's all sorts of ways in which I think people will find different business models that'll work if you privatize a beach. And and that's the beauty of a free market, is that people figure out things, figure out ways to give people what they want, and they make a profit doing that. And I certainly think that if you privatize beaches, that's exactly what would happen.
I'll admit that since 2017, so about 5 years now, I've actually paid every time I've gone to the beach here in Los Angeles. I don't pay a single fiat penny, though. I pay by cleaning up and picking up a piece of trash every single time I go to the beach. That is my payment. I love what you're saying about the idea of find the other aspects of the beach going experience and monetize those to increase those. I do have a concern with the idea of the government just sort of creating a bid to buy up beach property and beach land, because there's no telling what can or will be done with that. I do think rather you may not agree with this, I like the idea of zoning the coastal land as purely public, anything can be developed upon it, privatize those developments, and the payment is, in fact, pick up fucking trash so that the city itself, the country, the state doesn't need to actually pay or subsidize that cost. You yourself, as the beachgoer who experiences and enjoys experiencing the place that you're going to visit, should take care of the things that you frequent. That's my mini rant. Jimmy, I gave you the final word before we wrap today.
Yeah, that's not going to work. And every time something like that has been tried, where you try to socialize the cost of cleanup or whatever, it never works. There was I think one of the earliest colonies in America from European settlers was in Virginia, and they had like a huge famine, and the reason was nobody owned the land. It was everybody was supposed to work and do it, and of course one person got lazy and said, I don't have to work, everyone else will take care of me. It led to everybody not working, and they starved, right? Like, because nobody actually had motivation to work. The incentives were all off. And with public property, the incentives are all off. Unless you pay somebody to go pick up the trash, they're not going to do it. It would probably cost more to try to enforce a restriction like that, saying, okay, if you don't pick up trash when you come here, we're going to kick you off the beach. Just pay somebody to go pick up the trash. And that's what, what happens with public property is that it tends to like degrade very quickly. Like you have littering on highways and stuff like that, and they have to pay lots of other people or, rope in inmates to go clean it up. Public, like if it's privately owned, you're going to keep your stuff really clean because you want other people to come in and, use your business. So, you go to a movie theater and there's trash all over the place, you're not going to want to go to that movie theater. But if it's a clean place, then maybe you go back. And that's I think how beaches would be if it were private. It would be pristine, probably really clean. They'll figure out new ways to keep it clean and stuff like that. Maybe there's even like a Roomba for a beach or something like that somebody develops that works every few hours or whatever. Like there's all sorts of like things that we don't really even explore because there's no financial motive to do it. And that's the thing is if you try to make public property work, it never works because it's owned by everybody, so it's really owned by nobody. And what do you treat how do you treat something that you don't own versus something you own? Unless there are huge penalties for it, you don't treat it very well because it's not yours. The way people treat rental cars versus their own cars is very different. And that's exactly the thing. You have to be very like the people that own it are going to take the best care of it. And if you have a public beach, they're not going to take very good care of it. Private beach, it's going to do way better.
Well, we'll end it with that. Jimmy, remind everyone, if they're not following you on Twitter, at Jimmy Song, where else can they stay up to date with everything you're cooking up?
Well, other than at Jimmy Song, you've got programmingblockchain.com. You can go and look at all the stuff that I'm doing there. My newsletter is jimmysong.substack.com.
Fantastic.
Thank you, Jimmy, for joining us. If you're not already following Jimmy and his thoughts, be sure you are. Let's do a hard wrap. I want to remind everyone, if you have not already locked in your tickets to Bitcoin Amsterdam, buy those tickets now so P and I can keep our jobs. It's as simple as that, guys. All your questions will be answered in about 1 hour on Twitter, so feel free to pop on over where George and CK will be doing a Q&A session answering every and all questions you may have about Bitcoin Amsterdam. Buy the print mag, use promo code BMLive for that, or anything in the Bitcoin Magazine store as well. Have a little bit of a healthy competition here, and may or may not have put a lot more money than I should have down on that. So buy something using the promo code BMLive on the Bitcoin Magazine store. That's a wrap. P, final word.
That's it. Let's do it. Peace.